This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Special day, a special Fed meeting. Just simply, Paul, it's not going to be a snooze fest. We're already there.
It's not going to be a snooze fest here, Tom. We've got the futures kind of slight lift. Everybody's just kind of sitting back waiting for that 2 p.m. meeting and then the 2 p.m. release of the order, and then 2:30, the press conference.
Press conference going to be interesting. Michael McKee there with some terse questions. Is well, the heart of the matter, and for those of you not following this tick by tick, the real change, and Torsten Slok nailed it in a morning note from Apollo, just on with John and Lisa. And Torsten said, what slowdown?
Exactly.
And it's just as simple. Paul, I'll be honest, Lisa, I think Paul was way out front because, Lisa, you and I have no life. You go to a softball field and I sit at home reading. And, Paul, you're out there and you're saying America's booming from what you can see.
America's booming. And, it's the Torsten Slok has been on this, again, the principal economist at Apollo. He's been saying, what slowdown? He's been saying that for months now. The data that he looks at shows a pretty active U.S. economy, and he's pretty consistent on that.
Great lineup today. Alicia Levine to join in a moment. Jason Furman in the 9 o'clock hour. Kaylee Lines, as we get to the election, it's getting more and more interesting. We're thrilled that she will join us later as well. From the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
And we've got a slight lift to the markets. This is ahead of the Fed's interest rate decision. Now, traders split over whether the U.S. Central Bank will cut rates by 25 or 50 basis points later this afternoon. The Fed will also release new quarterly projections, and Chair Jay Powell will hold a press conference. Now, NASDAQ futures up 0.1%, same for Dow futures and for S&P futures. We have the 2-year yield at 3.61%. That's little change. The yield on the 10-year 3.66%, and that's up about 1 basis point. To commodities, oil turning lower after a 2-day gain. Brent crude down 1% at $72 a barrel. WTI crude at $70 a barrel. Companies making news, that's Tupperware, filed for Chapter 11 bankruptcy, listing its assets up to $1 billion, liabilities up to $10 billion. And shares of Alphabet, they're up about 0.5%. Google, they won a big court fight with the European Union over a $1.7 billion fine for preventing rivals from placing online ads. And finally, BlackRock, Microsoft planning a $30 billion fund to invest in AI infrastructure, data centers, energy projects. NVIDIA is going to advise a factory design and integration. So we have BlackRock up 1%, Microsoft up 0.3%, NVIDIA up 0.1%. That's a Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. We start strong. Seema Shah joins us right now, Chief Global Strategist at Principal Asset Management. Seema, I am completely bored by this debate. I believe Mr. Diamond of J.P. Morgan sort of said the same thing in the last number of hours. Are you riveted to the Fed debate, or are you just saying enough?
Oh my goodness, I'm in the enough camp. I can't wait for this to be over. We've all been fixated and obsessing.
Where did we get to this hysteria? How in God's name, Seema Shah, do we blame Lisa Mateo for this? How did we get here?
I think it's the fact that we've never got so close to a Fed decision and have the market still so undecided. And, a lot of it is down to the forward guidance, or I guess in a way, the lack of forward guidance, this idea of data dependency. But also, I think no one's very clear. We look, certainly for us, we look at the economic backdrop and we're not actually too concerned. We don't think a 50 basis point cut is justified. And yet, there's a number of people who are saying, well, look, why not? What's there to lose? And I think that's that lack of decision or lack of clarity is what has created this obsession. But as you said, the more important thing is what happens next. What is the timeline? What is the magnitude of overall cuts rather than what happens this evening?
Seema, for a lot of people in this market, it's been a while since they've experienced a U.S. Federal Reserve that's actually been cutting rates here. Assuming we're going to be in a period of, 2, 3, 4, 5, 6 quarters of the Fed actually reducing rates, how should investors be positioned, do you think?
Yeah, and I think this is a key question. And when you look back through history, it doesn't give you a very clear guide. There's a huge range of outcomes for the equity market. But when you start to dig in, we know that the major influence is really how strong is the economy? Are we looking at recession? Are we not looking at recession? If it's recession, well then Fed cuts, may not be able to help, and ultimately you're going to see equity returns very, very negative. If you're looking at a soft landing, the story is actually a lot more positive, and equity markets are going to continue to do well. We are in that latter camp where you see the soft landing, and as well as importantly looking through the noise, because I think the market noise is going to really hit a crescendo in the next week or so. We want to be looking out to January when we think that the macro data will be clearly improving, or at least clearly signaling that we're not facing recession. And then that should stead the way for earnings growth to be fairly positive, and then the equity market can eke out those additional gains.
So given that backdrop here, how far out on the risk curve do you think investors should be these days, whether it be equities, searching for growth, or fixed income, looking for some credit exposure?
So I think in this environment, we are still risk on, but we have to acknowledge that there is a slowing economic environment, and there are certainly risks out there. This whole debate around the Fed, it's not nonsense. There is a genuine recession risk out there. So from an asset class perspective, or at least from an asset allocation perspective, we're still very much risk on. So we have an overweight to equities, still mainly on the US rather than the rest of the world.
There you go.
And then within fixed income, we have a high quality tilt. So we're overweight credit, but mainly in that core fixed income space. So mainly on investment grade, some securitized debt, preferred securities, anything where you can get good income pickup, but also sitting in that slightly safer area.
A very constructive view. And folks, to be honest, a number of people that we've got today have the same view as Seema. They're betting for prosperity. They're betting for the American experiment to do well. Seema, to bring it over to economics and what Torsten said earlier, I can't get nominal GDP certainly under 4.5%. I'm not even sure I can get nominal GDP under 5%. I mean, as 70% of the economy is consumer, I'm sorry, the boom, the oomph is still there, right?
I guess I have to agree with Torsten. Like, there are cracks. And Torsten himself says that, that the lower income households are seeing some signs of struggle. But the truth is that for the US economy, the medium and higher income households account for 60 to 70% of the US consumer spending. So as long as they are okay, the US can do pretty well. And then your normal growth story still looks fairly constructive, which, taking it back to the Fed, they don't need to make drastic cuts over the next year or so. It's somewhat a little bit more shallow and a shorter cycle than I think actually the market is probably pricing in.
Can you give Paul an SPX call?
Okay, so this is interesting. So we're not expecting major gains. I know a lot of people out there are kind of putting out really, really strong numbers. For us, actually, you need a bit of a flush out in the market in order to set yourself up for really, really big gains. Now, we're not expecting a major pullback. So that means for us, it's fairly modest over the year or so.
Okay, Seema, thanks so much. That's great.
Yeah, absolutely.
Buy America, buy quality.
Sure.
It's, a lot of people disagree with what Seema Shah just said.
Well, I'm just looking at, in a fixed income space, the best place to be is U.S. high yield. I mean, the high yield market's been putting out some nice returns, so people are not that concerned about the economy, I guess.
What if they cut 50?
Yeah.
What if they cut 25?
Well, fortunately, we have a television show and a simulcast on radio at 1:30 p.m. that's going to help us get through all of that.
Well, because should they split the difference? I mean, there is ample history.
You can't do that, can you?
Yes, there's a whole history.
I've never seen that.
Of 3/8. I think there's even once Arthur
3/8?
Burns 5/8. I'll have to look. Jason Furman will know the answer.
People made a career on 1/8.
Well, yeah, I put out a quote from Alan Greenspan from 2004 talking about the efficacy of measured, and in the case of 2004, going higher.
Mm-hmm. Okay.
But the bottom line is we become measured.
Yep.
We're measured.
We're measured. All right.
We're very measured. So we'll see. We're going to have our coverage today. I'm thrilled to tell you that scheduled Mohammed El-Arian will be with us for a huge body of this. People go, why is he famous? He's famous. He's like, why is he a known commodity?
Oh, it's PIMCO.
Even go back to PIMCO and IMF.
Yeah.
But it's, he came out of the cottage industry of British game theory.
Okay.
And there's massive game theory going on here today. Like, we're demanding a T decision of 25 or 50 beeps. And everybody knows when you demand a T decision in game theory, this this is really, it's like a T decision to the weekend
Okay.
on the Detroit Lions.
Sure.
It's the third week of the season, and it's a T decision for the Detroit Lions.
One way or the
This
other.
is it.
This is it.
It's like week 12, except it's week 3.
Ruh-roh.
Futures up 8 with our news in New York City. Michael.
Thank you very much, Tom, Paul, Lisa. The Lebanese Health Ministry reports at least 12 people, including 2 children, have been killed and over 2,700 people injured after pagers used by members of Hezbollah simultaneously exploded across Lebanon. The militant group in Lebanon, as well as Syria, where some explosions also occurred, have blamed Israel, which has not claimed responsibility. Taiwanese company Gold Apollo says that it authorized its brand on the pagers that exploded, but that another company based in Budapest manufactured them. Former President Donald Trump will head to New York today to speak to supporters on Long Island. Last night, Trump held a town hall in Flint, Michigan.
We have to take back our country. We have to win. We're going to win, and we're going to make America great again. That's all there is to it.
Meanwhile, Vice President Kamala Harris visited Philadelphia to rally supporters in the critical swing state of Pennsylvania.
We're going to win. We are winning this campaign.
Harris also spoke before the National Association of Black Journalists yesterday. A special ceremony will take place today in Washington, D.C., as NASA administrators are preparing to honor the women who helped America win the space race. They'll be honored today with a Congressional Gold Medal. Among the honorees, mathematicians Dorothy Vaughan, Mary Jackson, and Katherine Johnson, all depicted in the 2016 Oscar-nominated film Hidden Figures. Global news 24 hours a day, and whenever you want it, with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Let's get out of the way. Detroit Tigers, there's 6 slots for the wild card. 3 and 3. And it's Baltimore's like clearly in. The Royals are playing smart, even though they're getting beat up by the Tigers. And I watched some Twins ball last night. And part of it is it's all in the Central Division, and these people are all in the race because Chicago is so terrible.
Oh, yeah.
It's sort of a reigning theme here.
I haven't seen the White Sox this bad. Well,
Ever.
Yeah. I've never seen them this bad. I'm sorry for the folks in Chicago that are fans of the White Sox, but, whoo, lordy.
And I must point out the Tigers are 8-2 in the last 10 games.
Yep.
Yeah.
How are they doing it, Michael Barr?
That all of a sudden the young bats are like, you know what? We can do this.
We should point this out. Their team is like 12 months older than pick your college team.
Yep.
Like Duke baseball, Rice.
Yeah.
Rice has great baseball down in Houston.
Yep.
They're literally like a year older than Rice.
I'm almost triple times older than the average age on
but
the team.
That includes a lot of Americans. It's exciting. It's a wild card. It's over like what, first week of October, and then 2 out of 3.
Yeah, we got
already
about
told me.
10 games left or something. Yep.
Is
something
it
like
10
that.
games left?
Yeah, I mean, I think we're pretty close to that.
Okay, well, it's fun. There's a National League, too. We'll cover that. But I had to get the Tigers out of the way, or Barr was
There's a National League?
Yes, thank you. Barr was going to storm out of the building with a Tampa. Detroit Tigers in the pennant race with the Minnesota Twins. Did I mention a team from Boston? Oh, no.
Oh, yeah.
I don't think I did. They're 5 back. There's like, see ya.
I'll give you a hug.
Well, yeah. Good morning, night. I'll drown my sorrows at the Burger King at 24 and $4.95. That's usually where you end up. Oh my God, the Red Sox. It's Fed Day with our special coverage this afternoon. Please stay with us. On YouTube, this is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures, well, we're in the green. This is ahead of the most anticipated Fed decision in years. Markets pricing an interest rate cut closer to 50 than 25 basis points. We shall see later this afternoon. But before that, some more economic data. We have housing starts and building permits at 8:30 Wall Street time. Meanwhile, U.S. mortgage rates dropped to a 2-year low last week. Mortgage Bankers Association data showed the contract rate on a 30-year fixed mortgage, are you ready for it, Paul, dropped to 6.15.
We're getting there.
Getting there,
All
percent.
Right.
The rate actually has fallen 7 straight weeks. Let's get to futures. So we have NASDAQ futures up 0.2%, 46 points. Dow futures up 0.1%. Same for S&P futures. We have the 2-year yield 3.62%, up 1 basis point. The yield on the 10-year 3.66%, and that's up 1 basis point. Few stocks on the move. Nippon Steel, it's up nearly 2% in Japan. Sources saying the company be allowed to refile its plan to buy U.S. Steel, most likely pushing that decision on the takeover past November. U.S. Steel up more than 2% as well. Intuitive Machines up 52%. The company said it got a contract from NASA, a maximum potential value of $4.82 billion. And finally, General Mills down more than 1%. It reported adjusted earnings per share for the first quarter matched estimates. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. This is Joy in the studio. It's Fed Day. Fed. What's the Fed going to do? Nobody cares. We have Ed Perks with us right now in the studio. And this is a personal note for me. One of the things that changed my life was I got in front of a guy named John Templeton when I was 24 years old.
Whoa.
And for some reason that I don't know, he spent a generous amount of time with me. It was with a guy named John Galbraith. They worked out of Toronto.
Yep.
It was Templeton in the Bahamas, value equity investing. And Ed Perks out of Yale did equity investing with Franklin and then Franklin Templeton as well. And we're thrilled he could join us today, president of Franklin Advisors. To me, it's one of the greatest mergers in the history of the mutual fund business. Value equity Templeton, and Franklin was killing it at the time in fixed income. And it's endured with all the pressures in that. Where's your industry in 5 years? Is it just one big roll-up because of ETFs and the new expense realities?
Yeah, I think you need to look at it both from investment capabilities and how to deliver those capabilities to your clients. And that's really been the evolution of our firm. With the strategy of finding unique specialist investment managers, being able to offer everything under the umbrella to our clients and to broaden it. Legacy Franklin funds and Templeton funds, as you are aware, were mutual funds, and broadening that into institutional capabilities, into ETFs,
right,
into alternatives. It's been a big part of our strategy, and that's something that we think over the longer term will be quite effective for our clients.
What will active look like? I mean, it's not going to be a story or a narrative. It's not going to be a, quarter-page ad in Barron's. It's got to be something different. What will active look like in 5 years?
Yeah, I think it's clearly been on a trend of moving away from, let's call it kind of style box.
Well said.
Said. And even in what we do in Franklin Income Strategies, which are multi-asset, there's a lot of ability to diversify our sources of income and to navigate not just where the opportunities are in markets, but defend against the risks we might see.
So looking for income, how do you allocate between equities and fixed income? Because I can sit in a 2-year treasury and get 3.6% here today. How do you guys allocate that?
We start with a 50-50 blend of equity and fixed income, and there's a lot that we can look at in that, from treasuries to mortgages to investment-grade corporates and high yields and floating-rate loans. On the equity side, it's dividend-paying common stocks, it's convertible securities, it's other structured equity. So you really bring a lot of flexibility to it. Now, I think the argument on the 2-year, Go back 6 months, go back a year, 2 years at 5%. Where is it going?
Right.
And that's really, what we're on the precipice of seeing. Obviously, the rate markets have moved ahead of the Fed, but it's all anticipating a certain number of cuts. And really, what it is, it's normalization of policy. Right? The debate is 25-50, but really, we can flip that on its head and say, look, how restrictive should Fed policy be today? And I think when you approach the question that way, it does lead to a significant number of cuts over the next 3-4 quarters.
When you talk to companies, maybe technology companies, you're out there in San Mateo, right there in San Francisco, the Bay Area. When you talk to technology companies out there, how do you talk to them about just returning cash to shareholders? A lot of those companies out there have so much great free cash flow, yet they're really reticent to engage a meaningful dividend policy. I think about our good friends down the 101 from you, down in Cupertino, giving us like a 0.7% dividend yield at Apple. Come on.
Yeah, we continue to fight the fight. As income investors, we'd like to see more of that cash. Now, clearly, they've favored share buybacks historically. And, we do think the trend over time as these businesses mature, still secular growers, but there's a lot of room to increase dividends to investors. We think that trend has started. It may take some more time.
Can we go to bonds? And, Franklin invented this thing. There were other players, Nuveen and others, but I'm sorry, double tax-free, triple tax-free, fourple tax-free. Is muni bonds still visible? And is it a place where people can find return?
Yeah, absolutely. We think muni bonds are incredibly relevant today to many investors, and that's just going to increase as we go forward. If we think about this election and what comes in the years forward, certainly taxation is going to remain very important, and we think there are areas within the muni market to capture attractive spreads, certainly
like
relative to other
infrastructure. Beleaguered this.
Yeah, I mean, infrastructure would be a clear opportunity as we all look around our nation. Clear examples of an opportunity's needs to upgrade and improve infrastructure. So yeah, we think that'll continue to be a good long-term 5-10 year opportunity within the muni space.
How about in the energy space? I know you list kind of ExxonMobil here, Chevron here. How do you think about the energy space? And you think about, because they do have some good free cash flow, some good dividend policies. How do you think about that?
Yeah, it is a free cash flow story. I think it's also a return of some capital discipline. So there is an emphasis, I think, at the major integrated oils to grow dividends, to reinvest in the business where they need to, but also to maintain balance sheet strength, and that's going to be a really important feature. And then ultimately returning capital to shareholders. So it's really the capital allocation decision in a backdrop of an industry that's making a very long-term transition, and that's something that we think still breeds opportunity.
We don't care about your investment acumen. You're only here because of the new kickoff rules of the NFL. Have you seen this travesty? You're acclaimed at Yale University for moving the ball between the uprights there. I mean, come on. The new kickoff thing. Did you spill the beverage of your choice when you saw that?
I still have to look away.
You have to look away. What in God's name are they doing, Ed Perks?
I hope this is a short-lived experiment.
It's just to kind of minimize, I guess, injuries, I guess?
It's injuries, right? It's just plain and simple. So don't you just move the ball back and keep playing? Like they kicked from where, the 30 in the old days?
Yeah, I think the intent is to not entirely take the return out of the game, but if you keep the ball at the same place, every place kicker can put it practically through the uprights from where the kickoffs are. Yeah. So I think they'll need to tweak it some more, maybe even move the line a little bit back towards the goal line, but make it more likely that you will get a return. You just don't get the high speed flying down the field, 50 yards, full-on collisions, and that's what they're trying to remove.
I find it extraordinary. Did you do the soccer thing, or were you straight on like Dempsey?
I was a soccer player growing up on Long Island.
Soccer thing.
Long Island. No, I was in San Mateo.
What do you think? Who had 7 field goals? The Washington Commanders. 7 field goals. Yeah. I mean, that's like a new game.
They beat the Giants.
They beat the Giants.
3 touchdowns, and the only other team only hits field goals. I think it's like the first time in whenever, Ari, that like you lost.
I'll say good morning to my kicker
second time
from
ever.
Another time and place. Charlie Gogolek, good morning. Here from our world headquarters. Ed Perks of Yale University in Franklin Templeton. Thank you so much on the NFL and a little bit on the future of asset management. This is a huge issue, folks. We take great pride here at Bloomberg Surveillance of not only what's the Fed going to do in that, but the revolution that's out there. And we thank, Paul, I can't believe I'm saying this, help me, hold my hand. Eric Belchunas, we thank for all the work he's done at ETFs.
I don't need to go there.
Yeah, I don't know. Maybe we'll get him up here.
Who knows where he is now?
He's down in Philadelphia, considering the Phillies winning a number of games. It is Fed Day. Special coverage, 1:30 this afternoon. A critically important meeting. Jerome Powell, the press conference at 2:30. Worldwide, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, after holding borrowing costs at a 2-decade high for more than a year, today is the day the Fed widely expected to cut rates. Now, the question is, will it be 25 or 50 basis points? We shall see. Ahead of the announcement later this afternoon, we have futures rising. NASDAQ futures up 0.2%, 43 points. Dow futures up 0.1%, 56 points. We have S&P futures up 0.1% or 8 points. We have the 2-year yield 3.62%, up 1 basis point. The yield on the 10-year 3.63%. 0.67%, and that's up 2 basis points. To currencies, a dollar weaker. Japanese yen stronger, up 0.4% at 141.73 against the dollar. The euro, British pound stronger. We have Bitcoin down 0.2% at around 59,000. Companies making news, that's 23andMe. Shares down about 0.2%. All 7 independent directors of the company have resigned. It came after negotiations with its founder CEO over plans to take the company private. And could a strike be brewing at Stellantis? The United Auto Workers asking members to green light a walkout against the company. ADR is up nearly 1%. And since we're talking cars, if you're looking to get a deal on a new vehicle, CarEdge says go with Stellantis. Its data actually shows Dodge Hornet, the Hornet, its compact crossover, the slowest selling car in America right now. That is a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Yes, Stellantis, I think it's like the Jeep. The dealers are in an uproar. I mean, it's bad when the dealers are screaming.
Right.
The kind of thing.
Yep.
Good morning on Fed Day. We try to avoid Ed Perks in here, and we're talking about wealth management and all that. Right now, we really link in here equity strategy with what we're going to witness at 2 p.m. Today. Alicia Levine, a good friend of the show, brings prodigious quantitative abilities at BNY Wealth, head of Investment Strategy and Equities. Okay, let's go Matthew right now. Stochastics is really ugly when you got the sharp turn. It's really hard to manage the turn, to do the turn, execute the turn. Where are we on the turn? Are we going into it? Are we at the apex, or are we coming out of it where they have some stability, a vector trajectory to a lower rate?
So we're in the middle of it because the turn really came in December. That was the turn.
Okay.
Right.
Last December.
That's
8 months ago. What took so long?
No, well, the market's up 19% year to date. So the turn happened in December when the Fed pivoted from a high for longer to we're cutting. So we're here. The interesting issue for today is that we're disappointing somebody. We're either disappointing the 25 folks or the 50 folks today because the market pricing is right in the middle.
Take it from your equity space over to the BTMM screen. How is this going to shift the gazillions of dollars BNY observes in short-term paper, money market funds, all the fancy Ira Jersey inward stuff?
So the interesting thing is if the Fed's at 25, then the hiking cycle could go longer, but it's shallower. I mean, the cutting cycle is longer but shallower. So in other words, you get 75 this year and not 100 this year, but the paper is already moving, right? Because short rates are now lower, and they've been lower all year, which is why when you ask where are we in the cycle, we are in the middle of it because the pivot is what caused all this to happen. We got delayed by hotter inflation prints earlier in the year, but essentially the path that the Fed laid out in December is happening now, starting in the summer.
All right, so given that backdrop, we're going to have the Fed start cutting today. It'll be on some cadence, some pathway over the next 3 to 4 quarters. What do we do here? I mean, I've already got the 2 years moved from 5%, just a cup of coffee goes, Tom Keene would say, to now we're at 3.6%. So where do we go from here?
Right. So look, I think that the 240 basis points that's priced into the bond market right now through the end of 2025, that number of cuts, we think that's a lot because actually we think the U.S. economy is in pretty good shape. So there could be some sell-off in the bond market because when there is a recognition that is just too many cuts. I mean, 10 cuts is a lot for where the economy is right now. But overall, if you look back at history, when the Fed starts cutting, you want to be in the bond market, right? So you may have volatility around it, and those days could be great days to enter into a position or to add to a position. But overall, when the Fed starts cutting, you're with the Fed here, and you want to be in the bond market, and you want to be out of cash.
You got a mathy top-down feel versus a lot of shops where they got huge walls of security analysts telling them what to do. Do you just assume corporations will adapt whatever they're handed by Powell, and that we will generate high single-digit, double-digit earnings growth? That seems to be the optimist conviction right now. Do you share that?
I do. We do share that because ultimately you'd rather have a strong U.S. economy feeding into earnings, driving the stock market.
I got a 5% nominal GDP. I'm talking, this is like anti-American. Alan Meltzer at Carnegie Mellon will roll over in his grave. We're talking 50 beep cut off 5% nominal GDP. Discuss.
Okay, so real Fed funds rate is over 2% now. So they have to start cutting. So we think they could go 50 today, in a world where they were simply just looking at where the real Fed funds rate is. The problem is there's the whole communication piece, and the Fed went dark, at the end of September 5th when that labor report came in that morning, not enough time to digest it. And so they're likely to do 25 simply because the market's too offsides. Like, there's no conviction in the market, and therefore the Fed can't be convicted on it either, although the path is convicted, meaning they're cutting, right? And the cutting path is pretty clear.
So this is like explaining to your kids that a C doesn't get it done.
A C doesn't get it done, exactly. So on the equity side, Alicia, where do you want to have exposure here if this Fed's going to be cutting and maybe cutting aggressively? Where do you want to be here?
Look, you see it already. REITs have been a standout. Financials have been a standout. So the conversation we have as well historically, when the yield curve normalizes and the Fed starts cutting, equities sell off. Well, they do that when the Fed starts cutting into the recession, right? Or into areas of true economic distress or financial distress, and then you get the recession. Yes, equities sell off even as the Fed is cutting. But if you go back to 84 or 95, when the Fed cut into a soft landing, you saw financials rallying and the stock market rallied. We think we're in that period.
Right.
We think we're in that period. Now, we've already had a 19% rally in the market, so there's plenty of time here for consolidation, a little excitement around the election, consolidation. This is typically what happens seasonally anyway, this time of year. Throw the election and you can go through October. But ultimately, the fundamentals are no recession, no earnings degradation, market goes up.
Are you concerned about this election, or do you just kind of put it aside and say, this market's bigger than that?
So we tell our clients to put it aside.
Put it aside. Okay.
Put it aside. Because, in the end, whatever volatility there is around it is usually short-lived because there is an answer.
Yep.
I think that if there's uncertainty going into January, let's go back to the 2000, stock market sold off 12%. Okay? So, and the Fed had to cut twice. So could that happen? Maybe. Right. But ultimately, we put it in a box and we look at the long term, and the long term is, America is the place of innovation and new, capital creation and new companies. So this is where our clients' money is, and that's where we want to be invested. So I don't worry. I'm not a trader. Like, we don't worry about what's happening in the next 3 weeks. We worry about creating wealth, preserving wealth, and where we should be creating.
So where are the shadows in the market right now? If you take the cross moments, and I'm going to, pick on skew just because that's whatever, the fancy quant people talk about. They go to Chicago and they go skew. Good, use that. You get a job. Okay, the skew, the dynamics of the market now, if I'm not trading, but I'm looking at 1 year, 3 year, 5 years, to me the dynamics are actually pretty healthy. If a company raises their dividend 10% and does a share buyback, the stock goes up. Makes sense. To you, is it a normal market?
It's a normal market.
I agree.
We're in a normal market. I really think 95 is the analogy here. I think we're in a place where we had some slowdown earlier in the year that looks to have stopped. Look at retail sales yesterday. Atlanta Fed GDP now is back up to 3%. Yep. So we know it's not exact, but it's directionally correct usually. And so it just feels like we're in a very good place.
Great.
So I'm worried. So the labor market is showing clear signs of slowing. I'd call it into a normalization, but that normalization seems to have happened earlier in the year than we thought. Because, the revisions have been pretty dramatic. So, the Fed can start. It's time to start. It's just time to start cutting.
And so, again, I'll ask the simple question of the day, 25 or 50. What should they do, and what do you think they're going to do?
So I think they should.
Better you than me.
Yes.
I think they should do 50.
Okay.
Because I think they're at least 200 basis points. Real rates are at least 200 basis points, and that feels too tight. And we're definitely squeezing the lower quintile consumer, and the housing market is all but stopped, right, because of mortgage rates. So that should loosen up. They should do 50. There's plenty of room here to cut. But I don't think they will, because I simply think the market's too offsides. There wasn't enough communication about it before they had to go into their dark period. And I think they'll think
Right.
the prudent and best path not to roil the market is to go 25.
Lisa's been medicating me with Tang since 5 a.m. I'm not giving my opinion, folks. Everybody's saying, what do you think? What do you think? What do you think? We were just going to listen to people like Alicia Levine.
Exactly.
50
coming
beats,
in
but they'll
studio.
go 25.
And it's okay. And it's okay. I don't think it roils markets either way,
okay.
although some parts of this trade are going to be disappointed. Last week, S&P up 4%, NASDAQ up 6%, going into that 50 basis point probability going
It's
higher.
fair. It's like therapy. Dr. Alicia, thank you so much. Alicia Levine, BNY Wealth, Head of Investment Strategy and Equities. Lift to the market. Levine moving the market higher. Futures up 7. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Pagers used by hundreds of members of the militant group Hezbollah exploded near simultaneously Tuesday in Lebanon and Syria, killing at least 12 people, including 2 children, and wounding several thousand. Hezbollah and the Lebanese government blamed Israel for what appeared to be a sophisticated remote attack. Israel declined to comment. Bloomberg's Ethan Bronner is in Tel Aviv with more.
It looks almost certain that the Israelis, through Mossad or 8200, one of their major intelligence organizations, got into the distribution or manufacturing chain of these pagers and installed small amounts of explosives in each pager, as well as a trigger inside that worked so that once a message was sent, the message was the trigger that exploded those little devices.
Bloomberg's Israel bureau chief, Ethan Bronner, notes that American officials said that the U.S. was neither involved nor informed in advance of the pagers incident. Ukraine said its drones struck a large military depot in a town deep inside Russia overnight, causing a huge blast and prompting the evacuation of some local residents because of the fire. Meanwhile, there is word Russia seized an eastern Ukrainian town. Speaker Mike Johnson says the House will expand the scope of the bipartisan task force investigating the assassination attempt against former President Trump to now include the second alleged attempt. The task force is led by Republican Congressman Mike Kelly, whose district includes Butler, Pennsylvania, where Trump was shot by a sniper during an outdoor rally in July. Kelly says that he expects the task force to present its first report next week.
We cannot tolerate this type of behavior and think that somehow we're the America that 1.5 million men and women in uniform died to preserve. It's time to say it's time to stop. We're going to find out what went wrong, and we're going to make sure it never happens again.
Congressman Kelly said the task force has conducted 23 interviews so far. Global news 24 hours a day, whenever you want it. With Bloomberg News Now, I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. To me, Paul, the number one thing they can do if they choose, I don't think they'll do it, is get away from this madness of no dissent. I don't think it's healthy. I think the Bank of England does it far better, even the EU with less experience. But this idea that we have essentially, we are the world,
right.
No dissent is just ridiculous, absolutely absurd.
Well, I mean, is it just tradition or?
Tradition.
Yeah, that's
established by, I'll blame Greenspan. Somebody else can blame somebody else. But I just think it's really, really painful. And this is the price we pay. We'll have full coverage for you today. The Fed decides. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Today, the day the Fed expected to begin its easing cycle. Watchers split on the size of the reduction. Market odds put the chance of a half-point cut at just over 50%, while most economists, they forecast a smaller move. Right now, we have NASDAQ futures up 0.1%. Same for Dow futures. S&P futures little changed, up about 5 points. We have the 2-year yield at 3.62%. That's up 1 basis point. We have the yield on the 10-year at 3.67%, and that's up 2 basis points. Over to commodities, spot gold higher, $2,580 an ounce. Brent crude down 0.8% at $73 a barrel. WTI crude $70 a barrel. Companies making news. It's Maersk. It said it's experiencing, quote, substantial delays in vessel schedules. That's due to major congestion at Mediterranean and also Asian ports. Shares are up about 1% in Germany. And shares of Aperol maker Campari down 5% in Italy.
I saw this. Yes. This is the lead item today. It was above the fold on the Fed.
The CEO gone after just 5 months. And since we're talking alcohol, Coca-Cola and Bacardi, they want to make your rum and Coke drinking a little bit easier. They're debuting a ready-to-drink premix cocktail in a can.
That's un-American.
There you go. That's a Bloomberg Business
That's
Flash.
the rage. Premixed cocktails. That's what the kids are doing, I think.
I interviewed the Campari people once. It's a fascinating story. They've just bought up different bottles that and they built a franchise. But this guy, I guess, 6-8 months, it didn't work out, and there's some delicacies in there as well. I read the article, and thank you for that. Great coverage by Lisa Mateo, always. Some of these stories away. Paul, I look where we are with this Fed meeting today, and I think the key thing that we've said is Alicia Levine covered it.
Yep.
We're up 18%
year to date.
And I think there's been a huge delinkage almost from the reality of total return, modeling in the future, that's what they do, versus the absolute hand-wringing angst. OMG, which sentence is he going to say at 242?
Right.
That's going to crater the market. And we'll have to see on that. My head's spinning. Good morning on YouTube. Subscribe to Bloomberg Podcasts out on YouTube, growing every day for us. That's the number one way you can help Lisa Mateo. Subscribe to Bloomberg, the podcast on your commute. Good morning, Android Auto. Apple CarPlay. I watched a video last night of the new Apple CarPlay.
Yeah,
I had no idea what they were saying.
Oh, it's awesome.
It's like
Great
all this
stuff.
Technology, and it's like, do you do Siri?
Sure.
Do you do Siri,
Hey,
like
Siri.
in the car?
Hey, Siri.
Hey, Siri?
Yeah.
Turn on Bloomberg Surveillance?
Absolutely.
Really?
The new car, it does everything. It's all technology, Tom. It's it's a PC or an Apple phone with 4 wheels. That's
if I
what
change
cars are today.
Afterthoughts name to Siri, I'll get something done in the house. Is that how this works?
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Good morning, everyone. Your daily look, the front pages, the Lisa Mateo Hour. It's brought to you by Interactive Brokers. Their portfolio analysts consolidate and analyze all your financial accounts in one powerful dashboard for free. Sign up for Portfolio Analyst at ibkr.com/free. PA. We say it twice on Fed Day. ibkr.com/free PA. Is your report today Fed free?
It is Fed free.
Yes. Okay, good.
Here we go. What it isn't free of, we've been talking a lot about sports, college athletes getting paid, right? Well, it looks like we've figured out who is going to be footing some of that bill, and that would be college football fans. This is the University of Tennessee. They're adding a 10% talent fee to 2025 football tickets that will go toward paying the players. It was made an announcement in an email to fans. Its athletic director said, hey, we want to be a leader in college sports. That means we want to be a leader in revenue sharing. 10%, though, only a portion of that cost. The university told Business Insider that talent fee is going to cover about 33% of that total cost. So now fans have to pay.
It's pro sports.
And there's something called the collectives, which are basically groups of a collective. Each university has a collective or more than one collective, which are just groups of boosters who pool their money to help fund NIL.
Educate me here.
Which is, I think, the real scary part of the whole thing.
Educate me at Tennessee. They've got D1 this, famous, football, basketball, whatever. They've got, I'm going to say, field hockey.
Right.
Do they get paid?
I don't
That's a
know.
good question.
And if they do, it's de minimis. If they do, it's de minimis. But, for example, women's gymnastics, some of those athletes are getting paid a lot because they have huge social media platforms.
Right.
And they're making tons of money.
The social media is part of this?
Yeah, absolutely. So the kids are figuring out a way to build their brands. And getting
Don't
paid.
ruin my week. Is Tennessee still in the SEC?
Yes.
Yeah, okay.
There you go.
Still, life goes on.
Right.
Next.
Oh, this is going to fire you up. Okay, so a new study shows that younger adults, more of them, are heading to TikTok for their news updates.
Sure.
Yes, this is from Pew Research. 17% U.S. adults say they regularly get news from the site that's owned by China-based ByteDance. We've been hearing a lot about it. That's a five-fold increase from 2020. The most likely to turn to TikTok for news, those who are between the ages of 18 and 29. 39% of them say they regularly get news from the app. I have to say, my young one, every time he has a news update and he sends me a little text and it's always a TikTok. I don't understand.
Are they accurate
news?
though?
Are they accurate?
Do you think they're accurate? Are they from reasonable sources you would deem?
Sometimes, but other times I'm like, just go to the original source. Like, what are you doing? And your mom's a journalist. Why are you sending me TikToks?
Exactly.
I looked at it for 2 hours, folks, total. Like, downloaded the app, looked at it. And I really wonder, just not to pick Bloomberg, but say the New York Times, are they going to distribute through TikTok? I just don't see it. I can't get there.
Don't know.
A lot of people have the TikTok. President has a TikTok, yes.
I don't know.
We'll have to see though. I mean, again, TikTok is it's with the courts right now.
It's going through a lot right now.
Yep.
Yeah. It's a big battle.
Next.
This one stuck out to me because I love the fall. I'm a leaf peeper, okay? So this is from the Boston Globe. The lack of rainfall in most of New England over recent weeks, it's going to affect the timing, the peak season. So the peak season is coming earlier than before. Okay. In fact, they're saying it already started in northern New England. At the same time, the color is not going to last as long. So if you want to see the colors, you should go now.
Okay.
And up your plans. The best places to watch the color: Western Massachusetts, Central Vermont, Western White Mountains in New Hampshire. So I'm a big fan of it. I'm going to be heading out.
Are you? See, I just think Jersey's got great foliage. I mean,
you do, but we don't get it first.
Yeah, but you get it the first week of December.
Right. Okay. All right.
We're a little behind the ball.
I just look out my window and I got great foliage. Yeah, I'm good.
It's a big deal. It's actually really important tourist dollars for a lot of poor parts of northern New England. It really works out.
They do. Okay, so we were talking about the Fed, right? Big decision coming later.
Right.
Everybody's waiting
Fed
for
free.
it.
No,
okay,
wait till
we
we
are.
go in.
Because
This is going to take a
guess
big
what
turn.
comes after the Fed? Later tonight, it is the debut of the Golden Bachelorette. Everybody's
Mrs. Keene mentioned this
about
to
it.
me.
She did. See, okay, she's a fan. It's Joan Vasso. She is school administrator, Rockville, Maryland. She's 61 years old. She's a grandma. She gets her choice of 24 men.
Nice.
24 men are going to be out there. She's going to pick who she wants to be hooked up with. But she's a widow. Like we said, married 32 years, 4 kids. She's looking for someone outgoing, someone courteous.
6'5", finance guy.
Blue eyes.
Blue eyes.
Because last year it was a 72-year-old grandpa.
It
He dated
was.
22 women on TV. Now it's
Now it's on
switched.
to
Now it's on.
Yes,
okay,
now it's on.
awesome.
And she was actually part of The Bachelor, but she had to leave early for a family emergency, so they picked her. She's coming back. And the guys are between the ages of 57 and 69. So it should be interesting. I mean, she's saying that, she also wants someone who wants to help her with grocery shopping and yard work because she doesn't like doing that.
I qualify.
Bingo!
Is it successful? Is the show like
it is a huge deal? The Golden Bachelor was a huge success for ABC, so that's why they're hoping that this is gonna kind of.
Lisa Mateo, I can't think because of the Golden Bachelor. I'm thinking of Lisa on the show, but that would be Lisa Mateo. Thank you so much for the newspapers today. People say music's dead and that somebody can't come out of nowhere and do better than good. There is a band in Wales that just started off. The talent of a guitar player. They just sold out the Troubadour umpteen nights in a row like they used to do in the 60s. Cardinal Black with Chris Buck.
Just to be the object of your blame, to make you feel whole again. Yeah, yeah, yeah. I've been holding my breath, falling from grace, taking my time. I don't know where I'm on my own without you.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Lisa Mateo, Michael Barr. It is Fed Day. In 6 hours, there'll be some form of decision. Well, somebody said to me, what's a beep? Exactly. 50 beeps, 25 beeps. You move the decimal point 2 places over, so 5.25. And so if you go 25 beeps one on, that's 5.00, but you move the decimal point 2 places over, so this way you get better service at a bar on Wall Street.
Very good.
That's why you do it.
That's how you do it.
What are you looking at right now, Paul? I mean, we're nuts about this Fed thing.
Yeah, I'm looking at a market that's a little undecided, Tom. Not a lot of movement here in the futures market. I'm looking at the 2-year Treasury, the most sensitive to the Fed here. It's up about 1 basis point here, 3.62%.
It's up a little bit in the last couple of days because we had good economic data.
Yeah, sure.
And Torsten Slack says there's no slowdown. What slowdown?
That's what he's been saying for months now.
Alicia Levine's pounding the table.
Exactly.
Kim Dawson, I don't think she's negative.
I don't think
We're going to talk to her in a moment. We'll see. We'll talk to Cam Dawson here. I'm not going to give my opinion. They're out there. They're asking on YouTube. One guy out on YouTube wants me to produce TikTok. Really? No, I'm not going on.
Okay.
I'm not going on. I'll go on TikTok when Cam Dawson goes on TikTok. Good morning in Singapore. Really appreciate your attendance here in the late evening. They will stay up late in Singapore and listen to the Fed Decides, Bloomberg Surveillance there on the Pacific Rim. I'm all fired up. That's all I can say. Bloomberg Surveillance this morning. We're brought to you by Cohn Resnick on this Fed Day. Cohn Resnick, thank you. Cohn Resnick Advisory, Assurance Tax, discover optimization strategies that are helping CFOs make their finance function more competitive, more resilient. Talk to Cohn Resnick's advisors. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
You got it. And we have futures right now, little movement. This is ahead of the Fed's interest rate decision this afternoon. Policymakers also releasing new quarterly projections, and Chair Jay Powell will hold a press conference. So Nasdaq futures, little change, up about 20 points. Dow futures up 23 points. S&P futures up about 2 points. The 2-year yield, 3.62%. That's up 1 basis point. The yield on the 10-year, 3.67%. And that's up 2 basis points. Commodities, oil turning lower after a 2-day gain. Right now we have Brent crude at $73 a barrel, WTI crude at $70 a barrel. Heading over to spot gold, higher, up to $2,578 an ounce. Companies making news, Tupperware filing for Chapter 11 bankruptcy protection, listing assets up to $1 billion, liabilities up to $10 billion. And shares of Alphabet, they're up more than 0.5%. Google won a court fight with the European Union over a $1.7 billion fine for preventing rivals from placing online ads. And finally, BlackRock, Microsoft, they're seeing the potential of AI. They're planning a $30 billion fund to invest in AI infrastructure. NVIDIA will advise on that factory design and integration. You have BlackRock up 1%, Microsoft up 0.3%, NVIDIA up about 0.1%. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. We had Ed Hyman in yesterday. What a great honor to have Ed Hyman in from Evercore ISI. He was with us 10 days ago, made a change. We had him back in yesterday as he turns more optimistic on a soft landing. Cam Dawson, I mean, it's the same thing as with Ed Hyman. I mean,
solid.
Give Cam Dawson on 10 days ago. She talks double-digit earning growth. We said, get her back on now with New Edge, Cam Dawson. Here, Cam, if we get a vector of rate cuts, what does that do to earnings in America? Do you just assume that it's the wind behind you, the sailboat's moving fine? Do we just get a better corporate economy with rate cuts?
That's such an interesting question, mostly in the morning where we got mortgage applications, which surged higher by double digits, really in response to lower rates. So as you see rates fall, we should see some of these cyclical parts of the economy that have been held down by higher rates, think your autos and your housing, start to tick back up. We also know that there's a correlation between falling short-term interest rates and CEO confidence, meaning when short-term interest rates are falling, you've often seen CEO confidence rise. And when CEOs feel more confident, you see more CapEx decisions, as well as M&A, which in theory should help with overall growth.
Well, that's where I want to go. Paul, jump in here.
Yep.
I'm asking Paul Sweeney a question with Cam Dawson. It's a no-brainer that CFOs panic as rates come down. They got to worry about debt reconstruction, debt modification, and they go, what are we going to do? And Paul, M&A is always defensive.
Sure, absolutely. We'll see. M&A is a function of confidence in the economy. So, Cam, when you see rates coming down, do you want to embrace growth stocks, or do you want to look for more interest rate sensitive stocks?
That's the money question of the day.
Yeah, what we've typically seen post the first rate cut is that it has been more in favor of those interest rate sensitive stocks, as well as defensive stocks. But one of the things that we're seeing is growth versus value does look to be starting to change directions, meaning that we had a parabolic move higher, kind of a blow off top in the summer in growth versus value. And to the day that the market started pricing in 100% probability or more of a 25 basis point cut in September, so today, we've seen growth versus value turn direction, which means that this market is looking for cheaper stocks and saying that maybe growth won't be as scarce going forward, so we don't have to pay up for it as much.
So does lower interest rates, does that make this market less, expensive? Does it give you some credit, some cushion on the valuation?
Not necessarily. If you think about it, of course, versus bond yields, yes, you could make that argument, but we all know how that worked out in 2021 when people said, look, the equity market isn't expensive because look how low bond yields are. We think it's still really important to look at absolute valuations, and that is the one thing that does give us pause about this market. If you look on a forward basis, the market's trading at 21.5 times forward earnings. The only time we've been more expensive than that was during the pandemic peak, as well as during the tech bubble peak. So there's a lot riding on the good news continuing, which just means that there's not a lot of margin for error if you do start to see any pockets of growth weakness materialize. And of course, it's a question if we see that, given the fact that we now have a supportive Fed.
But we have nominal GDP. I mean, Torsten was out this morning making a splash with no slowdown. Cam Dawson, you were in the other day telling me we're going to get double-digit earnings growth. Okay, fine. But I don't understand the frenzy over rate cuts with 4.5% or 5% nominal. I understand getting it going, but do you agree that the frenzy's a little overdone right now?
I do think the frenzy's overdone. I think that the data, if you were to take a snapshot of it today, you would argue that why is the Fed moving to want to do aggressive cuts? Why would the Fed want to endorse this Fed rate cut path, at least through the next 15 months or so, which we've never seen the Fed cut so much without a recession.
Yes.
So the question is, as you are seeing the Fed potentially cut interest rates as if we're in a recession, easing financial conditions further, does that cause a reheating of the economy that's unwelcome? We certainly saw that in a time like 1998, where the Fed eased policy only 75 basis points, and you saw this rip-roaring runaway rally.
So where do we get leadership from this market, Cam, going forward? I mean, a lot of our investors, a lot of our listeners and viewers, they've only known tech as the leader for this market. Where do we get leadership going forward?
Yeah, it is quite a predicament because that's where you also see the most overweight positioning. Deutsche Bank publishes a great sector flow chart. And what you see there is that tech has been the only sector that has seen sustained inflows over the last 12 months. And so it creates a predicament for investors who might be sitting on big tax gains because tech has done so well. What do you do with tech as it's seeing its leadership fade? If we look at the relative performance of tech, it really has started to break down where it's passed the mantle over to those more defensive and interest rate sensitive parts of the market. So we do think that tech could continue to struggle, but the message there is one where we don't see tech having this really distinct weakness like we saw in 22, which was amplified by a lot of earnings estimate cuts. If tech earnings do remain in, maybe it doesn't lead the market and it's more sideways, but that doesn't necessarily mean you should take big tax gains.
Now look at the Launchpad, the Bloomberg Launchpad, Cameron Dawson. And the fact is, it's 5,700 SPX, 42,000 futures on the Dow as well. What's your SPX call at 12 months, given all this foolishness?
Yeah, well, we do think, at least in the very short term, that we think volatility could continue simply because of seasonality. Then we get that rally into year end.
Right.
But one of the things that we're contemplating for 2025 is that if we start to see those forward earnings estimates start to level off, we could have a lower return year in 25. It's not the end of the world, but it looks a bit more like a 2015 or a 2018, where you saw EPS estimates start to level off. Again, appreciating you're going into this at very fulsome valuations and fulsome allocations as well.
Right. Generous of you to be with us today, Cam Dawson, on this Fed Day. Cameron Dawson with New Edge. Really appreciate the return visit here. Chris Whalen, moments ago on Twitter, Paul, let me read it verbatim.
Okay.
Bottom line on the Federal Reserve is that they should do nothing. The progressive crowd led by Senator Warren will yowl like wounded dogs, but the fact is a rate cut today is political, and inflation remains. Powell fails again. Third strike, by the way. Brutal tweet from Chris Whalen.
Yes.
I promise we'll get Chris Whalen here if he's not off south of the equator. We'll get Chris Whalen in here in the next coming days. That's an important discussion point on this linkage of politics to this Fed Day. With our news in New York City, I'm Michael Buck.
Thank you very much, Tom, Paul, Lisa. Today, Hezbollah vows retaliation for the pager explosions that rippled across the country Tuesday, leaving hospitals operating at full capacity, trying to accommodate the thousands of wounded. At least 12 people were killed, including 2 children. Former State Department official Steve Ganyard says Hezbollah's decision to get rid of cell phones earlier this year likely sparked the idea for this attack.
What seems to be a very sophisticated operation by the Israelis actually worked by using lower technology, the pagers that they used to implant with explosives that would have detonated on all of the Hezbollah operators who were affected.
Former State Department official Steve Ganyard spoke to ABC. Donald Trump will be in suburban New York today. The former president will be on Long Island where his party is trying to protect Republicans in Democratic-heavy congressional districts that Joe Biden carried in 2020. Yesterday, he spoke at a rally in Flint, Michigan, and attacked the media.
The fake news likes to say, oh, he was rambling. No, that's not rambling. That's genius when you can connect the dots. You got to.
Also today, Vice President Kamala Harris plans to speak at a Congressional Hispanic Caucus conference. Yesterday, she spoke before the National Association of Black Journalists, saying there is no place for political violence in our country.
We can and should have healthy debates and discussion and disagreements, but not resort to violence to resolve those issues.
Harris has upcoming trips to Michigan and Wisconsin. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
And Michael Barr, thanks so much. On your compute, good morning, Android Auto. Apple CarPlay, all out with new software here. Apple CarPlay any day with iOS 18. On the corridor, good morning on traditional radio. We really thank you for your support. Huge support in Washington for Nathan Hager.
Oh,
He's
of course.
amazing. He goes into a Starbucks down there.
Yeah, everybody
the
knows
place
him.
just stops.
Yep.
Bloomberg Daybreak and Nathan's great work with Bloomberg News Now. That's really breaking for us. Bloomberg News Now is how you get an immediate compendium over an hour or when there's special news. Hugely successful. In Washington, 99.1 FM. In Boston, 92.9 FM. It is Fed Day. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, we've got a mix of red and green on the screen, and this is ahead of the most anticipated Fed decision in years. Markets pricing in an interest rate cut closer to 50 than 25 basis points, but we'll see later this afternoon. Before that, we do have some more economic data. Housing starts, also building permits. That's out about 15 minutes from now. So we have NASDAQ futures, little change, down about a point. Dow futures, little change, up about 13 points. At S&P futures, they're little change, down by about a point. To the two-year yield, 3.63%. That's up 2 basis points. The yield on the 10-year, 3.68%, and that's up 3 basis points. Few stocks on the move. Nippon Steel up nearly 2% in Japan. Sources saying the company being allowed to refile its plan to buy U.S. Steel. Most likely, that's going to push the decision on the takeover past November. U.S. Steel up more than 2%. Intuitive Machines up 52%. The company said it received a contract from NASA, a maximum potential value of $4.82 billion. And finally, General Mills down more than 1%. They said its quarterly profit fell, weaker sales, particularly in North America. Higher costs weighed on their margins. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. It's Fed Day. We're all ramped up. Thank you across the nation for listening on radio, Sirius XM as well. Some guy in Arizona on live chat, Paul, he's talking about, Paul Harvey and a million years ago.
Really?
Which really brings back a lot of memories for me. Thank you for mentioning the kindness of Mr. Harvey. He was a generation. He died at 90, way ahead of us, but basically invented a huge part of radio.
Sure did, absolutely.
And did that. And the phrase he does, and this is like Lisa. I mean, I don't think we could say this for Barb, but this day's news of most lasting significance.
Oh, okay.
That was a Paul Harvey phrase.
Okay.
Lisa's very good at the news of lasting significance. Thank you out on YouTube for that. Really appreciate it. Got a nice conversation going there on YouTube, and will into the Fed today, our special coverage at 1:30. Paul, why don't you bring in, we got to cover the dollar. What will the Fed do to the dollar?
Exactly right. James Lord, he's global head of FX and EM strategy at a little shop called Morgan Stanley's based in London. James, the narrative has kind of changed over the past couple of weeks from a 25 basis point cut by the Fed to perhaps 50 basis points. What are you seeing in the currency markets? What are you telling your clients about what we may hear from the Fed this afternoon?
Yeah, well, it's been really interesting to see the market shift in that pricing and to think about how that happened. There wasn't really any Fed communication, official Fed communication. There was no data. It's all shifted on the back of the various media articles that we've seen, the Wall Street Journal article, the FT article. And to me, my reading of those media articles was that the decision is very finely balanced. I didn't think that there was much in them to suggest that the Fed was sort of informally trying to guide the market towards a 50. I think it was just, it's a finely balanced decision, and it could go either way. So I think some investors have maybe seen a little bit too much signal in those articles, and that actually, there is a higher probability of a 25 than what many people seem to be thinking now, and that's actually the Morgan Stanley call. I mean, our U.S. economics team is still on the 25 basis point move for today, and not just for today, but also at each subsequent meeting through to the end of the year. So only 75 basis points of rate cuts priced there, which, yeah, I mean, if that's the communication and that's the result that we get tonight, then the dollar's gonna have a knee-jerk bounce. I think like the path beyond like the immediate reaction, where the dollar's going to bounce on the back of that outcome, but there are enough investors out there who are sufficiently worried about the state of the U.S. labor market that think that kind of policy move and guidance is not going to be enough to give the market confidence that the Fed is moving fast enough to stave off a deeper slowdown. So the question is like, do the rate cuts then just get priced further out the curve, and you just see, maybe the 2-year point, 3-year point moving lower despite the very front end moving up? And that then raises a question, okay, it's a little bit risk off. There's a dollar bounce against maybe commodity currencies and things, but more interest rate sensitive currencies like dollar yen, like I think that could keep heading down actually on the back of an outcome like I just described.
At 2 p.m. today, is Jay Powell central banker to the world? I mean, we're already seeing EM get out front of this. There was a rate cut somewhere this morning. I believe it was in Indonesia. I got a headline here, Bank of Indonesia to keep intervening in FX market, et cetera, et cetera. Is Jay Powell doing a discreet U.S. dance today, or is Jay Powell central banker to the world at 2 p.m.?
I mean, I think the Fed is always, to some extent, the world's central banker, right? I mean, the dollar continues to be the biggest reserve currency and finances global trade and capital markets across many places. So, absolutely, it will have a big impact, I think, on not just on emerging markets, but how other DM central banks may think about things as well. I mean, if the Fed ultimately goes, say, the Fed does a faster pace. They go 50 today. They even communicate their willingness to do 50 in November.
Right.
What does the ECB think about that? What does the market think about the ECB for October? I mean, at the moment, there's very little price.
Okay, let me rip up the script here. This is really important. I'm glad you brought this up, James Lord. Measured. I put out a Greenspan quote from 2004 on measured. I'm going to suggest the Fed's under huge pressure to be measured, where the ECB is moving away from measured. Do you agree with that?
I think the ECB sounds very measured at the moment, right? I mean, when the ECB, the last decision, sure, they cut 25, but gave no forward guidance at all about their willingness to move in October. We think that they will skip in October and that they will cut in December, because December is, they will have a lot of forecasts accompanying that decision where they can justify the reason to cut more adequately. But I think at the moment, the signaling that we're getting from this ECB is that they're very cautious. I mean, there isn't really a debate at the moment about whether they could do 50s, let alone, I mean, we're not even talking about doing consecutive meetings at the moment. So I think like the current debate suggests to me that the risk is that the Fed is to some extent throwing caution to the wind, whereas the ECB less so.
Okay.
Ultimately, we see the Fed doing less than that. We think the Fed's only going to do 25, but the debate is different, I think, for the ECB.
Right.
But it's an interesting question for further down the road, because I think there's a big debate about where neutral is and what the market is currently pricing. Like if you look
where
at the
we're
Fed's
heading.
pricing.
Okay. We got to leave it there.
Right.
James Lord, we got to leave it there. James Lord, thank you so much. Morgan Stanley, appreciate it this morning. Paul, he brings up a really important point that somebody had in the research the other day, which is everybody's focused on 25, 50, da-da-da-da-da. What are we going to do in November? What are we going to do in December, January? But the real issue is in their minds, where's the terminal value?
Yep.
Where are we going? And where they're going, that to your point, hinges on the housing market.
Yeah.
And on, frankly, the equity, the ratios of equity, you flip them over and what the PE will be.
Yeah, and we'll see where the where the economic data comes in. That will certainly inform where the Fed will proceed over the next 3, 4, 5 quarters as it looks to get back from a really restrictive level of interest rates now that inflation has been, for the most part, tamed across the economy. The Fed can start thinking about where they need to take rates down to. And that's kind of what we're going to start seeing today. And we'll see that. We'll probably hear that in prepared remarks today and in the Q&A, Tom.
Well, and thank you for mentioning that. The Q&A will be absolutely fascinating. Last time it was fascinating. I was amazed. I mean, people say, how do you stay awake for this? And it was actually really, really rich and interesting what he said last time. And I think one of the themes out there we're hearing from a number of guests is that Chairman Powell really wants to go 50. I have no idea. But, the economic data, again, I look at, to be kind, this is most odd, is how I'd put it, to be having this discussion with where we see selected economic data that's better than good.
Yep.
And do you think the housing market will explode with some further rate cuts?
I don't know. What I asked the real estate experts, Tom, is there a mortgage rate out there that will get, the middle American homeowner to say, oh, now I can sell my house and go somewhere else because I'm not too worried about a higher mortgage rate.
Yeah.
I don't know if that clearing rate is at 6%, 5%, 4%. I don't know what that rate is.
It is Fed Day on YouTube. Subscribe to Bloomberg Podcasts on YouTube. Thank you for the live chat. Android Auto, Apple CarPlay, Good Morning in a Quarter, 99.1 FM Washington, Bloomberg 1130 in New York, in Boston, 92.9 FM. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, after holding borrowing costs up to a 2-decade high for more than a year today, yes, it's the day the Fed widely expected to cut rates. The question is, will it be 25 or 50 basis points? We shall see ahead of that announcement later this afternoon. We have futures, little change. NASDAQ futures up about 0.1%. Same for Dow futures, S&P futures, little change, up about 5 points. The 2-year yield, 3.63%. That's up 2 basis points. The yield on the 10-year, 3.68%. And that's up 3 basis points. To currencies, we have the dollar weaker, Japanese yen stronger. Same for euro, British pound stronger. We have Bitcoin down about 0.5% at around 59,000. Companies making news, it's 23andMe. Their shares now down 9%. All 7 independent directors of the company resigned. It was after talks with its founder CEO over plans to take the company private. And could a strike be brewing at Stellantis? Well, the United Auto Workers are asking members to greenlight a walkout against the company. ADR's down up nearly 1%. And sticking with cars, General Motors electric vehicle customers, well, they're getting access to Tesla superchargers this month. But you're going to need to buy an approved adapter, which is going to cost you about $225. But in 2026, the EVs will be sold with that built-in port. GM up 0.5%, Tesla up 0.3%.
Car Talk with Lisa Mateo.
This is your Bloomberg Car Talk. Tom and Paul.
Lisa Mateo, thank you so much for that. Economic data, and it's important. I didn't think I would say that 5 minutes ago. Housing starts and building permits, they come out buoyant. Month over month, housing starts, just for one statistic, 6.5 positive was the survey, jumping 9.6%. But critically, the revisions were on target, are actually a little bit improved. And you see it in the market. The 2-year yield now out 2 beeps, 3.63%, 4 beeps in the 10-year, 3.68. We may get back to 4% in the 30-year. But I'm sorry, Paul, it's good. I don't know. I'm not a housing expert, but Ellen Zentner would tell me this is good economic data.
This is good economic data, Tom. I mean, we've been told we have a housing shortage here in this country, and the builders have been building like crazy for the last 4 or 5 years. Now we just need mortgage rates to come down a little bit.
Our economic indicators, all of our economic support of Michael McKee. It's brought to you by Commonwealth. Join over 2,000 independent financial advisors. They are taking control of their growth. With advisor-centric support and future-ready technologies, grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. The most important discussion today on the equity markets. Darkening the door, Greg Bowdle joining us in our studio, head of U.S. Equity and Derivative Strategy with BNP Paribas. He's been modeling caution in the equity market, and he hasn't budged. Greg Bowdle joins us now. To be clear, out 12 months, your SPX is below this 5,700 level?
Yeah, so our target is 5,400, so it's below the current level, but we were below that level just a few weeks ago. The big call that we've had in equities this week has been to buy the dip in optionality. There's a ton of events in the calendar.
What does that mean? Lisa, slap them. That's way too much jargon. Buy the dip in optionality. What does that mean?
It's a pretty simple message. There's an absolute wall of catalysts from now into the back end of the year. We think that is under-reflected in the price of options, the price of optionality, volatility, and we think that's where the opportunity lies. Both tails of the distribution we think are potentially fat. On the upside, if we make new highs, and clearly on the downside if the data disappoints.
Do I buy options? Do I sell options? Puts, calls? I don't know. I kind of missed that day in options, futures and options class.
Buying optionality, buying puts, buying calls, depending what your view is in terms of the delta. So for us, it's about finding asymmetric returns. We think where the market is going to be.
Continue.
Where the market is going to be at the year end is going to be dependent on what happens today in terms of the Fed, what happens with the next key bits of data, ISM payrolls, what happens with Q3 earnings, and what happens with the election.
If I want to buy in calls with a bull belief away from what Greg Bowdle's saying, but you're saying buy the move, is that a sector choice or an index blended choice?
It could be both, but I think the bellwether for a rally from this point is likely to be the small and mid caps, IWM, Russell 2000. If you buy into the soft landing narrative with a Fed cutting cycle and the market making new all-time highs, we think that would be rotation into cyclicality. IWM is probably the most obvious way to play that.
Tom, in Greg's report, he has a great flow chart that even I can understand. It's basically saying, do you think it's a hard landing or a soft landing? And then under that scenario, do you think the Democrats are going to win or the Republicans are going to win? And then it flows out to all kinds of different options, and it's color-coded. So green is good. I think red is bad. I think that's good. What's your base case there in that scenario? What are you telling clients these days?
So I think the message really has been try and find trades that can work in those different scenarios. So you can build a portfolio that has asymmetry such that if you have that extreme right tail where it's soft landing, deep Fed cuts, red wave scenario, that you have a great payoff, but you also have something which can navigate a more recessionary environment. So that's why the focus is optionality rather than outright delta.
I'm deaf on call writing, but let's go there. If I'm writing a call, folks, I'm looking at an equity and I'm saying I believe it will go up, but not too much, and I'm going to bring in a premium to essentially enhance the dividend, et cetera, et cetera. Is call writing now a dominant strategy, or is it still a crapshoot?
There is a huge amount of call writing in the market. A lot of that semi-systematic. There has been an absolute explosion in mutual fund ETF flows into that space. My view at the moment is that what we should be doing on a tactical basis, I'm not saying it doesn't work strategically, but on a tactical basis, is buying rather than selling optionality. But there has been an absolute wall of that supply.
I want to translate this right now, folks. The heritage of French mathematics on global Wall Street is substantial, and it starts with dominant BNP Paribas and their friends at Credit Agricole, and of course all the derivative animals. It's SocGen over the year. But what you hear Mr. Bowdle saying here is a normal conversation, math-based in Paris. I'm loving this.
So, Greg, what are your clients saying to you these days? Where do they want to get a little bit smarter, do you think?
So I think everyone is trying to navigate the same thing. It's these key catalysts, these inflection points. Are we in a 1995, 1998, 2019 preemptive Fed cutting cycle that builds this kind of right tail and bullish cyclicality? Or are we in those other type of Fed cutting cycles that tend to be coincident with a real slowdown in terms of the macro data that tend to drive those big left tail events? So all the focus today is on the FOMC. But our view is really the growth data that's going to drive whether we're higher or lower into the back.
What's your GDP overlay on this? I mean, the heritage, this goes back to Julia Coronado or even before Riccadon and others, the heritage of BNP Paribas is a more cautious call on real GDP. Do you still stay on that with your equity call?
The base case is for a soft landing. The issue there is when the markets think about these things, we don't think in a binary outcome. We don't just have one view and then put all the chips on that view. The question is the distribution of returns. So even if the modally most likely outcome is a soft landing, the risk of a recession is higher than it has been historically. And that's why we're more concerned about that fatness in the left tail of the distribution. And that's why just buying equities at all-time highs we think is a dangerous strategy.
Lisa's got to make some money here, pay for tuition. Are you telling me a put strategy to buy puts, betting on Mag 7 underperformance is efficacious?
So what we did was put out a piece this week where we essentially put out a menu of trade ideas, some of which bullish, some of which bearish, but we do not think that they're contradictory, they're more complementary. So it's trying to find those parts of the distribution which we think offer the best potential returns. So I touched on it earlier. Where do I think the fattest right tail is potentially in the market? I think it's the small and mid caps. But that's also a part of the market that historically has not done well at all in recessions. So that's the part of the market where we think the optionality is potentially the best value and the outcomes have the fattest tails. So we're focused on looking at what are the right ways to play that right tail, or what are the right ways to hedge the recession risk.
Paul, to frame this for mere mortals, he's long the Mets, short the Red Sox. Okay, that's
exactly. Small and mid cap stocks, that's layering in a level of risk that for a lot of investors, because those stocks generally have not performed well. But we've seen them, the Russell 2000 kind of do well over the last 4, 5, 6 months.
Yeah, absolutely. If you roll that chart back a little further, 1-2 years, the underperformance has been at times huge versus the Magnificent Seven. When we look at the debate, is it Magnificent Seven? Is it cyclicals? Well, the best performing sector in the US this year is actually the utilities. So that definitely gives this underlying sense of caution in positioning, even though we're at all-time highs. That's why I think if we do make new highs, it's likely to be led by that part of the market. Again, the message we're hammering home is optionality is the way to play that. If we do move into a recession and it does turn out that the Fed is behind the curve, then sure, those stocks could have a hard time too.
Greg, thank you. Greg Bottle, head of U.S. equity and derivative, I should say, option strategy as well at BNP Paribas. Thank you so much. Futures up 10. The VIX elevated 17.67. With our news in New York City, Michael Moore.
Thank you very much, Tom, Paul, Lisa. Lebanese officials now say a dozen people are dead, including 2 children, and close to 3,000 others hurt in a wave of pager explosions yesterday. Hundreds of those victims are Hezbollah members. Bloomberg's Jumana Bersachi has more from Dubai.
Within Lebanon, this has placed the country on a high state of alert. There was a lot of chaos around the hospitals yesterday as the ambulances were flooding in. Many of the wounded would have lost their fingers. The casualties were targeted around their waist area. And so the repercussions are very broad.
Bloomberg's Jumana Bersachi in Dubai, and Jumana will have more on this story coming up in a few minutes. Secretary of State Antony Blinken says it's not clear what impact the attack will have on Hezbollah or its operations. He is in Egypt to discuss a ceasefire deal between Israel and Hamas in Gaza. All but 2 Republicans in the Senate voted to block a bill which would have ensured nationwide access to in vitro fertilization. Democrats had brought it back to the floor after Republicans previously blocked it from advancing in June. After the vote, Democratic Senator Tammy Duckworth of Illinois said IVF is now threatened by former President Trump, who appointed 3 of the 6 Supreme Court justices who voted to overturn Roe v. Wade.
He is the reason that IVF is in danger. He is to blame. He and every other Republican who cares more about staying good with Trump than about doing good for the Americans they are supposed to be serving.
Senate Democrats pledged to have another vote on their bill to codify federal protections for IVF. And finally, happy birthday, Mr. President Jimmy Carter. He turns 100 on October 1st. And his home state of Georgia celebrating. Among the guests at an early celebration at the Fox Theater in Atlanta, former UN Ambassador Andrew Young.
When I met him, I would have been happy to make 40. Now, I want to be like him and make 100.
Carter's grandson says the former president watched the party from his home in Plains. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom Paul, Lisa.
Michael Barr, thanks so much. On this Fed Day, Bloomberg Surveillance, brought to you by IBKR Financial Advisors. Switch to interactive brokers for lowest cost, global trading, and turnkey custody solutions. No ticket charges, no conflicts of your interest at ibkr.com/RIA. Paul Sweeney and Tom Keene. Paul, were you taking notes there? Are you going to slide in here in the break to the 9 o'clock hour? Are you going to slide in some long calls?
Exactly. I mean,
remember the put-call ratio?
Yep, absolutely. Buy the dip in optionality was Greg Bottle's call, and it's a pretty clean call there. But again, we'll see the rhetoric that we get out of Fed Chairman Jay Powell about maybe the pace and cadence this Fed may pursue in terms of getting those getting that interest rates down, and then of course a lot of folks will be looking. Are we going to see that in the mortgage market? We see mortgage rates.
The rule of thumb I have, folks, on a leverage of options and futures, and these are just guidelines. It's by no means mathematically solid, but you buy a stock or whatever, and if you buy options, it's sort of like kind of like 4-to-1 leverage. 4-to-1.
Yep.
Futures are 10-to-1.
Oh boy.
And that's the old school.
Yep.
I'm sure Sheldon Natenberg or somebody would say, "Now you're out of your mind." But you read Sheldon Natenberg?
I don't think I did.
Option volatility and pricing.
I definitely did not.
47 Greek letters in that puppy.
Yeah, no.
I was honored to meet Sheldon Natenberg. Good morning to all the options derivative animals out in Chicago. That's where Sheldon Natenberg was.
That's where it all started. Those people are serious.
Can't say enough. It's a rite of passage. You read Sheldon Natenberg on options. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Today, the Fed is expected to begin its easing cycle, with watchers kind of split on the size of the reduction. We've had some more economic data out today to kind of play into that. U.S. housing starts bounced back in August, increasing to the fastest pace since April, increasing 9.6% to 1.36 million annualized rate. Building permits, they climbed as well. We have NASDAQ futures up 0.2%, 44 points. Dow futures up 0.1%, 45 points. S&P futures up 0.1% or 7 points. The 2-year yield at 3.63%, up 2 basis points. The yield on the 10-year 3.68%, and that's up 3 basis points. Shares of JP Morgan Chase up about 0.2%. They're after reports that it's in talks with Apple about taking over a credit card portfolio that rival Goldman Sachs has been trying to ditch. We have Apple up about 0.1%. And Craigslist founder Craig Newmark plans to donate $100 million to boost the country's cybersecurity. Wall Street Journal reporting half of the money will go toward protecting infrastructure, the other half toward educating people about safeguards. That is a Bloomberg Business Flash. Tom and Paul.
Lisa, thank you so much. We spoke a few days ago with Jumana in Dubai about what and my mind escapes me right now. I'm so Fed focused, I can't get there. We speak to her again this morning. Jumana Bertecci's in Dubai leading our coverage on something. I want Matt Damon to come in and explain this to me. Yep. It's extraordinary. On the pagers, Hezbollah, Israel, 2,800 injured, more than 9 dead, differing reports. Jumana, let me cut to the chase. What was the nature and character of these explosions? They seem to be a little unclear. Was it like a suicide bomb? Was it a narrow, small explosion? Do we know?
Let me answer your first question. Obviously, I'm going to try to do my best Jason-born impression here. It was a high-scale intelligence operation that caught Hezbollah and all of Lebanon completely off guard. Nothing in this scale or nature has ever happened on Lebanese territory before. And a Hezbollah spokesperson themselves, they said this is the biggest security breach they've ever seen in all of their time operating with these tit-for-tat escalation, tit-for-tat strikes versus Israel. And so what we're seeing here is a new phase of the war. We've moved from a hot war, so to speak, on the southern border towards cyber warfare. Now, in terms of exactly what happened, the mechanics of it, the cybersecurity experts that we have spoken to have said that most likely these pagers had been tampered with at some point in the manufacturing process. And here we can get into more details, but essentially what we found out is that the original manufacturer was this small, unknown Taiwanese firm that makes pagers. But in this case, they put out a statement, and even the Taiwanese ministry put out a statement saying that they did not specifically manufacture the pagers that were used yesterday. They had outsourced their branding to another manufacturer in Europe and being traced back to Hungary. And there it appears that these devices were infiltrated and little bits of explosive material was put in those pagers that were then detonated simultaneously in Beirut yesterday.
Jumana, do we have any comment from Israel about their role in this, or because it just seems like a significant escalation on the part of the Israelis?
So Israel typically would not comment on incidents like this, and they have not commented on the incident. The Lebanese government and Hezbollah were quick to blame Israel and to point the finger at them. The Lebanese prime minister said it is an attack on Lebanese sovereignty. And the prevailing perception is that Israel or Israeli intelligence were behind it. We're also hearing from other reporting, Axios, saying that the U.S. were not aware that Israel were going to conduct an operation of this sort. And of course, Anthony Blinken in the region now, he's in Egypt. Amos Hochstein, another trip to the region, senior Middle East envoy, they were not aware of the operation. So it seems like everybody was caught off guard.
Jumana, if I go out of Beirut, and I believe it's on 51 South, down the shore past Sidon, I'm going to butcher the pronunciations, folks, I'm sorry. But if I go, Jumana, to Saksakia on the coast of the Mediterranean, 33 miles south of Beirut. Now, I guess there's Hezbollah there, but they're mingled in among other people that aren't Hezbollah, right?
Of course. Yep. Absolutely. And this actually, you raise a really interesting point because within Lebanon, the Lebanese public are divided. This is a very fractured country. Remember, it's a country of 18 different sects. You've got Christians, you've got Sunni Muslims, you've got Shia Muslims, you've got different alliances. It's very complicated. And there is a sense of fatigue in the country in that why people are asking, why are Hezbollah fighting a war on Lebanese territory on behalf of another political group? And there is a bit of fatigue because this has been going on for almost a year now. There's a sense that there needs to be a refocus on some of Lebanon's domestic issues. The economy has been massively declining. There's political paralysis. There hasn't been a government in place for a couple of years. There's no president. So lots of other issues to focus on. But actually yesterday was really interesting because for the first time in a very long time, you saw all of the country rally behind, I don't want to say Hezbollah, but behind the victims of what happened. And for once, we're seeing a bit of unity from Lebanon in that the whole country is shocked and is on high alert and very scared about the next steps. There is a sense that this could lead to something more ominous.
So, Germana, I guess a lot of folks are just trying to get a sense of what might be the strategic thinking on the part of Israel here to, again, escalate this in such a unique way, I guess is a way to frame it.
So you have to trace it back to some comments from Israeli Prime Minister Netanyahu yesterday morning. And he said that they've introduced a new war objective. And that new war objective is to get back security on the northern border, because since October 7, as we've been covering and talking about, there have been daily exchange of crossfire with Hezbollah. Many citizens have been forced to flee, to evacuate, to leave their homes. It has now become a priority for the Israeli government to allow some of those families to come back into the north. And for them to be able to do that, they need to be reassured that they won't be under the threat of attack. Yeah. And it feels as though Israel's patience is running thin. The U.S. have tried to come to an agreement via diplomatic means, and the comments from Netanyahu recently suggest that because their patience is running thin, they are willing to start escalating things just a little bit more. Yesterday was a case in point where they really wanted to intimidate Hezbollah, and they certainly did that because it's a massive breach of intelligence. Hezbollah are on the defense now.
Germana, thank you so much. Horizons out of Dubai on Bloomberg Television. Yep. Germana Japetsi, thank you so much. Greatly appreciated. This morning, you know, there's all this stuff from a distance, but just the general reports in the American press, including Bloomberg News, Ethan Bronner, and Tel Aviv, and all. I mean, it's just absolutely frightening. I mean, there's the video, the kid's sitting there in produce in a store, and there's 10 people around him.
Yeah, it's
and
just
they're not all Hezbollah.
No. And as Germana was reporting, you know, there's a sense of fatigue setting in that region of the world, you know, after the October 7th, and kind of where do the parties want to take this over the next coming days and weeks and months?
The data screen, it looks like the fourth week of August, 3 p.m. on a Friday. We're waiting. Here's 6 minutes before 9 Wall Street time. We're waiting out for the Fed decides. 2 p.m. We'll have coverage for you today. Please follow us across the nation. Carol and Tim will be involved, and you know, a lot of good analysis, balance of power before, on the politics of the moment. But it's going to be fascinating what we see at 1:30 in conversation. Mohammed El-Arian scheduled to be with us. Into the 2 o'clock statement and onto the press conference at 2:30. Michael McKee is in Washington. Futures up 8, Dow futures up 51. VIX is important to me, 17.76. We get out near an 18 VIX. I assume in the Eccles building, I've been in the room a couple times, pretty magisterial. Yeah.
Okay.
Big table, fireplace, the generals were there in World War II. And you just wonder, you know, okay, they're going to be dancing on the ceiling. I mean, that's about all they got left to do within the debate. You wonder, will we see dissent? This is one of the most interesting songs of all time. Lionel Richie already established, bet his career on this. And he made the most expensive video up to that time.
Is that right? Okay, I remember the
video. He basically out Michael Jackson, and put up with a huge song that was hugely successful. I mean, Lisa Mateo's too young to remember this, but Dancing on the Ceiling.
Yeah.
Lionel, they'll be doing that at the Eccles building, 2 p.m.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation is still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, this Fed Day. Michael Barr, Lisa Mateo with this real fired up, smart guest here. As we had Kim Dawson earlier, we got Gina Martin Adams here to talk about her optimism on earnings, corporate America, wrapped around the migration of the Fed rate. And we'll have to see that. Housing starts. Paul, I'm sorry, what Torsten Slok said earlier, where's the slowdown?
Where's the slowdown?
And the housing starts, to me, were a general indication of what slowdown with a constructive revision.
I know. I mean, housing starts
Constructive revision, bada bing, thank you.
Yeah, but housing starts month on month, up 9.6%. That's pretty solid here, off of a weak month last month here. But we need mortgage rates to come down, Tom, to free up some more.
But they're coming down. Come on.
They are coming down. They're
You're
not
a yield
coming down.
hawk.
Well, I'm getting a little greedy where I want to refinance the mortgage, but that's the way I roll.
And now we stop the show for the tri-state area. Good morning, Bloomberg 1130 AM, 92.9 Boston, 99.1 Washington. What are they doing in the election with the deduction of state taxes?
Matt Miller came running over to me this morning because he's all enthused that maybe both of these candidates, or at least one of them, will get rid of that SALT limitation.
This is the SALT thing that, you know.
We pay property taxes in the tri-state area that are probably a little bit more than most people pay, and we like to deduct those.
Okay, but is it for those who are nationwide not up to speed on this? Trump in Florida said, get the fancy people in the fancy states.
Yep.
And he put in SALT. Is that accurate?
Well, he limited it to only like $10,000, so that's not much of a deduction I can claim. So now he says, no.
That's your green fees.
Exactly.
I mean, you spend more than that.
Tab.
You spend more at the package store, you know, in the Jersey Shore than that.
Exactly.
Gina Martin Adams is going, why am I here?
Why am I here?
Okay,
Exactly.
We'll see. It is Fed Day. From the Interactive Broker Studios at Bloomberg Business Flash, Lisa Mateo.
Well, let's get right to it. We've got green on the screen. This is ahead of the Fed's interest rate decision this afternoon. Policymakers also releasing new quarterly projections. Chair Jay Powell hold a press conference. NASDAQ futures up about 0.2%, 54 points. Dow futures up 0.1%, 52 points. S&P futures up 0.1%, 9 points. We have the 2-year yield 3.62%, up 1 basis point. The yield on the 10-year 3.67%, and that's up 2 basis points. To commodities, oil turning lower after a 2-day gain. Right now we have Brent crude at $73 a barrel, WTI crude at $70 a barrel. Companies making news. Tupperware filed for Chapter 11. It's going to look into court approval to allow for the sale of its business. And then you have shares of Alphabet up nearly 1% after Google won a court fight, with the European Union. It's over a $1.7 billion fine for preventing rivals from placing online ads. And BlackRock, Microsoft, they're teaming up. It's one of the largest efforts to date to fund AI infrastructure. They're looking to deploy about $30 billion in private equity for AI. We have BlackRock up more than 0.5%, Microsoft up 0.2%. That's a Bloomberg Business Flash. Tom and Paul.
Thanks so much. On this Fed Day, Lisa Mateo joining us now, Gina Martin Adams on equities with Bloomberg Intelligence. Gina, as you know, within the microeconomic foundations of all we do, there's this word ambiguity. What's the ambiguity to corporations, to revenue growth and earnings growth down the statement of a vector of Fed rate cuts? It's got to cut one way and cut another way as well.
Okay, so I think this is a really interesting conversation because there is this perception that rate cuts have really elevated earnings growth. And the most direct way that rate cuts would have elevated earnings growth over the last cycle would have been through an improvement in EBITDA, right? You see interest expense decline, you ultimately see better earnings growth. Are we actually getting there or not is a big question. We actually find that the impact of lower interest rates on interest expense was de minimis, even through the last cycle, because you saw this larger deleveraging experience. So the stronger impact is not in between revenue and earnings, it's actually on the revenue line. It is the Fed cuts ultimately result in stronger economic conditions or borrowing by the private sector, which ultimately feeds through to stronger revenue growth for the S&P 500. It's not that rates are going down so they can borrow cheaper. It's actually rates are going down so that their customers can borrow cheaper to fuel their revenue lines.
This is bulletproof. Eric, feature this on Single Best Idea today. This is really, really important. So do you see an underestimation of constructive revenue growth forward?
I think it's definitely a very big possibility because we've been caught in this cycle for the last 2 years, really, of fear of economic recession. And so no one is overspending. What you generally find is CapEx to sales ratio are about at long-term average. They've reverted back from well below long-term average in the pandemic to about long-term average. You're not seeing consumers getting ahead of themselves in terms of the real rate of spending. It's back to really low, sort of single-digit levels of growth. And it's been there for a while as we've been fearing this recession. So if the Fed can effectively give us this 1-2 punch of both preventing recession from emerging and re-stimulating growth by reducing rates, creating that revenue recovery, it could become a very strong self-fulfilling prophecy in earnings, and it has not existed, importantly, for the better part of the last 3 years. This is not a normal cycle where things get way out of bounds, we get way too optimistic, way too bullish, way too overspent, and then we have to correct in a downturn. That hasn't happened.
And then these dynamics, shout out to the great Tom Gelvin, who rode the horse at DLJ for years. I'm sorry, the revenue line forward, Paul, huge deal.
Yep. One of the many things I love about Gina's research is an industry scorecard. I did not like the last one I read.
Oh, the tech one.
What came in last on your industry scorecard?
Yeah, it's not been good. Tech is in an interesting position because the biggest of the big cap tech in hardware and software are starting to fall beneath the midline in our scorecard. It's really within tech. Our scorecard is suggesting you want to migrate to some of the smaller names, not in semiconductors, not in hardware and software, but in the lesser known communications equipment type of names in the tech space. So there is this internal migration happening in tech, which is really reflecting the internal migration happening in the S&P 500 at large. We're seeing a very clear preference emerge on a fundamental basis for stocks that were left behind in the Magnificent Sevens rally, in the big cap rally that really dominated equity market returns of the last year and a half. It's a tactical position. We run these every quarter, and we are in the midst of a rotation right now, so some of it is reflecting that. But on a fundamental basis, we're seeing brighter prospects emerge for some of the smaller names, which means tech may continue to kind of struggle in relative terms here.
And media came in dead last.
Yeah.
I mean,
that's
I
no
leave
shock.
the industry and it goes to, I mean,
yeah, well,
happens?
that's, we can blame you for that.
All right, so, I mean, I'm sensitive, I'm concerned that the overall market can't work higher if tech's not leading it. I think we've become so conditioned to, boy, if Microsoft and Amazon and all those Apples of the world aren't leading us higher, do I put my money on energy or industrials?
I completely sympathize. The world sympathizes as well. I do think the market can go higher without tech leadership. The part that is really problematic for the market is when tech is falling. When tech stocks are falling, it's very difficult for the S&P 500 to post gains because it's just too big of a market cap share. But if you could get some stabilization in tech stocks, and just see rotation, money come into the equity market, starting to pile into some of the non-tech names, you can see the S&P 500 rise.
Gentleman out on YouTube live chat goes, Gina, please tell me which small cap is going to the moon. I know you're not going to do individual stocks, but can you go sector analysis in the Russell 2000? Which sector leads?
It's a great question. Within the Russell 2000, there are two sectors.
It's a great question. Give me another one, RP.
Two sectors. Thank you, RP. The two sectors that have to do well for the Russell 2000 to do well are healthcare and financials. These are the two most critical sectors inside the small cap index. All of our work is saying that small caps should start to perform a little bit better. And that is largely because of financials. Financials tend to benefit when the yield curve becomes a little bit more upward sloping. You see some valuation expansion. That should work relatively well in Russell 2000.
Tom, Gina's wearing a bracelet that says Gators.
Yes.
The Florida Gators are 1 and 2 so far
come
this year.
on.
How bad
Did we have to do this on
How
a Wednesday
bad are
morning?
things down in Gainesville right now?
Yeah, it's been a rough few years, to be honest with you. Everybody's very hopeful that this will, that we're in a turnaround story. It's a rebuilding year. Several years of rebuilding years now, so it gets a little old. But it's been a tough one so far.
I got an email from West Lafayette, Indiana yesterday. Good morning, Rachel. Glad you're listening to us on, I think it's AZY. And she said it's a rebuilding here.
Yeah.
But you don't
I'll take it.
University of Florida.
I know, we shouldn't be rebuilding. We should always be on top. That is the mentality, is when we're not winning, we're losing.
The Montreal Canadiens have had a rebuilding decade as well. Gina, I look at the equity markets, and I think we're benumbed that we're up 18% or whatever. We've had a huge lift. Is the Fed lifting the market, all this blather of the last 3-4 days? And the answer is yes. So what, for you as an equity animal, what will you listen for in the press conference?
Yeah, it's a great question. The Fed is lifting the market to some degree, right? Not the entire market, because we're seeing still the S&P 500 is off of its July peak. We're retesting that peak. But it's lifting up some of the beleaguered non-Magnificent Seven names through an environment of potential optimism emerging for borrowing conditions, right? What I think I want to watch for in the Fed is just how long is this easing cycle going to continue? Right. Just how panicked are they about the labor market? Do they see something that I don't see? Because frankly, the economic data looks about the same, with maybe a little bit of labor market weakness emerging. What are they really seeing in the economic data?
Okay, Gina Martin Adams, thank you so much. Just brilliant. We'll feature that today in Single Best Ideas, a podcast on a YouTube podcast, Apple Podcast. With our news this Fed Day in New York City, Michael Barr.
Thank you very much, Tom, Paul, and Lisa. Former President Donald Trump will appear at a rally today in suburban New York City. Trump will appear at an event at the Nassau Coliseum on Long Island. Yesterday, Trump mentioned that Vice President Kamala Harris called him after Sunday's apparent assassination attempt. He spoke yesterday at a rally in Flint, Michigan.
Kamala today, she could not have been nicer. But the fact is, we have to have people that are respected by the opponent, by the other side, by other countries.
Meanwhile, Kamala Harris will focus on courting the Hispanic vote today. She's addressing the Congressional Hispanic Caucus Institute in Washington, as Donald Trump's debunked debate comments about migrants eating pets in Ohio have upended the immigration debate. Bloomberg's Kaylee Lyons has more from D.C.
We heard Harris talking about that really in her most forceful and passionate words yesterday at the NABJ interview, calling it a crying shame what's happening in Springfield, Ohio, and the children having to be evacuated from schools, and just what has actually taken place because of the rhetoric that has been circulating online and, of course, from the Republican ticket. But it does obviously point to immigration and migration issues specifically, and that's where it is somewhat of a difficult area to navigate, as she also tries to court the Hispanic vote that could be critical in some of these swing states that she's trying to win, like Nevada.
Bloomberg's Kaylee Lyons in the nation's capital. Finally, need a new passport? No need to do it in person anymore. The State Department says online passport renewal will go live for the first time ever for the entire country starting today. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Across the nation, good morning. In your commute, Apple CarPlay, Android Auto, some good software upgrades there. Paul's going to teach me about Siri. We're going to get there. On the quarter, 99.1 FM Washington, Bloomberg 11.30 New York. Good morning across all of New England, 92.9 FM. Thrilled that you're with us up in New England. And on YouTube, at the office, at home, YouTube. Subscribe to Bloomberg Podcasts. Really building out nicely for us. This great digital experience on radio. This Fed Day, it's Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Alicia Mateo. Futures, well, we have small gains right now. This is ahead of the most anticipated Fed decision in years. Markets pricing an interest rate cut closer to 50 than 25 basis points. We'll find out later this afternoon. So NASDAQ futures up about 0.2%, 52 points. Dow futures up 0.1%, 46 points. S&P futures up 0.1% or 8 points. We have the 2-year yield at 3.62%. That's up 1 basis point. The yield on the 10-year 3.68%, and that's up 3 basis points. Few stocks on the move. Nippon Steel up nearly 2% in Japan. The company getting an extension on its $14.1 billion takeover offer. That's for U.S. Steel, and that decision essentially resets the clock until after the election. Intuitive Machines are up 55%. The company said it got a contract from NASA, a maximum potential value $4.82 billion. And General Mills, the maker of Lucky Charms, down about 3%, said its quarterly profit fell, weaker sales, particularly in North America. As higher costs, they really weighed on their margins. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and Paul.
Fed Day today. Thank you, Lisa Mateo, so much. Greatly appreciate it. Paul, there's something going on here. Sure. You're not policing the interns. This is the second guest this week where we've got to open with the Texas Longhorns. What in God's name is this about?
They are for real this year.
Paul Knopp joining us now with some real substantial effort at his Austin, Texas. What is going on with Longhorn football? I mean, what's the Kool-Aid down there?
Well, we're really proud of our team, but I think, Tom, the message is take it 1 week at a time.
It's fun.
It's fun. It's fun.
I want the Cotton Bowl. I want fighting Texas Aggies Longhorns Thanksgiving Day at the Cotton Bowl.
That would be good.
Everybody would watch.
Yeah, that would be good. I'm a product of an age when the Southwest Conference was a big thing.
So. It was. Your show was a big thing. Here, we are thrilled you're here with KPMG. And I got to ask you a couple industry questions before we get to your wonderful CEO survey. My grandfather would have adored you because you came out of audit.
Right.
What's the problem with the consulting side of the business right now? Guys like you are the meat, the potatoes, the oxygen of the system, and there's this incredible sector tension between audit and consulting. How do you fix the tension?
Well, so we have a multidisciplinary model. We have audit, tax, consulting, and deal advisory strategy. We think that model is absolutely fit for purpose. We don't feel tension between the two sectors within our business. What I would say, Tom, though, is that there's some softness in consulting, and there has been for about 18 months, with more caution around corporate spending. But what we see is real demand when it comes to transformation. So particularly technology transformation, and generative AI is feeding some of that right now. So we feel really good about the prospects of the consulting business long term. But at the end of the day, that business really helps our tax and audit business to succeed in the market.
All I ask is ChatGPT helps me with debits and credits. It hasn't worked out so far.
Debits to the left, credits to the right. That's what I remember. All right, Paul, you guys at KPMG, you talk to everybody. I mean, on your Rolodex, which kids don't even know what Rolodex is, every CEO of every corporation around the world. And I know you guys survey your clients.
We do.
What are they telling you about some of their biggest issues or challenges right now?
Well, there's no doubt that cyber is a big risk, and generative AI is causing that risk to evolve over time. Geopolitical complexity is at the top of the list and has been for almost 2 years now. And then political uncertainty is really high up there too, particularly around what's going to happen in Congress with the TCJA expirations, almost $4 trillion of tax provisions expiring at the end of next year. Those things are really top of mind. A big challenge, though, they cite too often is making sure that they embrace and embed generative AI in their businesses. They believe, business leaders believe it's going to be truly transformative, but it's probably more in the time frame, Paul, of 3 to 5 years from now. Your companies have to make sure they have their data right, the quality of the data, the right governance around it, and make sure they have their employees adopting it and well-trained on it.
On the consulting side of that at KPMG, how do you help people not throw money into the wind? How do you make an efficacious expenditure in this newfangled AI?
Right. So you start with making sure you have a trusted framework for AI, because you're going to lose credibility really quickly if you come out of the box with something that's not safe and ethical. And then you move to talking to your clients about use cases. Where can you put generative AI in your business, AI in your business? Typically, Tom, it's been in the area of customer experience very early. Companies thinking about how you interacted with your customers with generative AI, but we're also seeing it definitely impacting the speed of development of software, of coding software.
Coding is the heart of the matter.
Absolutely. And then because of its predictive and analytical capabilities, it's very powerful in finance and accounting too. So we are definitely talking to clients moving from not just use cases, but actually they're operationalizing it.
And this is where you say, and when we consult, we say, of course you need a Bloomberg terminal.
Absolutely.
You're there.
Exactly. Absolutely.
So cybersecurity, I kind of feel like, we talked about, it just seems like the growth story that just keeps on giving. I've not spoken to a CEO who is not increasing his or her investment in cybersecurity. I guess the question for a lot of them is, how do you do it smartly? I mean, I can't go out and just buy a piece of software off the shelf and say I've dealt with my cybersecurity issues. How do you do it smartly?
Right. Well, you certainly have to talk to a lot of different stakeholders and constituencies to make sure you get it right. The risk is evolving. So as I mentioned earlier, these deep fakes that have been that are emanating from generative AI and AI are sort of new on the scene the last couple of years. And so because of the continuously evolving nature of cyber crime and the criminals are adopting different techniques, you have to be ever vigilant. Awareness is really crucial as a preventative measure, making sure that you prevent the cyber crime from happening in the first place. And then just making sure that you're working with the right technology providers to monitor and ensure that you're capturing these threats before they become reality.
Right. I want to talk about the real headache at KPMG is getting and keeping the young troops and the glorious skill of accounting. Let's start with the why. Why all of a sudden is it hard to find audit people like you were years ago out of University of Texas?
Yeah, there's been a precipitous decline in the number of students going to college, number one, but then certainly going into accounting. So it's a real challenge. We are certainly as an industry and as a firm trying to entice and tell our story about the long-term benefit of an accounting and auditing background.
What's entry for non-CPA accounting? Kid green out of school, not KPMG, but just as a general industry statement.
Yeah, so it would range from sector to sector from anywhere from $60,000 to $100,000+ in that range coming out of college.
And then they get on CPA track.
You're certainly a important asset if you have a CPA, and that's something that is a declining number of them.
So
right
where
now.
is that compensation level?
So that compensation level is sort of built in and expected that you would achieve that status, but once you achieve that status, you can expect your compensation to accelerate.
You're not going to give me an answer. Come on, it's Bloomberg Surveillance. Give me a number to the penny.
The kids come out of college today with their accounting degrees, and they basically have their CPA.
Yeah, that's what I was going to say, Tom, is that when they come out of college, they typically within 1 to 2 years have their CPA. It's sort of expected they will get it.
And you're paying them $100,000?
Well, so at certain levels we are, yes, and at certain markets we are. So you're obviously going to have something different in New York than you're going to have in a middle market.
And do you still send your consulting teams and your audit teams on site, or since the pandemic, is everything remote now?
So no, it's hybrid. It's definitely hybrid, and we're traveling a lot more. I'd say on average we're back in the office 2.5 to 3 days a week with a hybrid, flexible approach.
I got 20 seconds. We got to make some news here. Nobody cares about today. There's nothing going on this afternoon. Paul Knopp, just simple. Are you going to 5 days a week like Amazon?
We have no plan to do so. We are planning on optimizing our hybrid environment right now.
That's the world.
And try to make sure that...
Give his entourage in the control room. Would you give him some Tang so they'll calm down? We got to go. Paul Knopp, this is great. When the fighting Texas Aggies beat the Longhorns, come back. That's all I got to say. The Chief Executive Officer of KPMG. Thank you so much. That was a great diversion for Fed Day. What's the Fed going to do? 1:30 this afternoon. Be with us.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. So how are the markets going to kick things off on this Fed day? Market odds put the chance of a half-point rate cut at just over 50%, while most economists forecast a smaller move. We've also had some more economic data out today to kind of play into that. U.S. housing starts bounce back in August, increasing to the fastest pace since April. We're off and running, so let's get right to it. We'll start with the S&P 500 up 0.1%, 6 points, 5,641. The Dow, little changed, up 7 points, 41,618. We have the Nasdaq up 0.2%, 34 points, 17,663. The two-year yield, 3.63%. That's up 2 basis points. The yield on the 10-year, 3.68%. And that's up 3 basis points. To commodities, we have spot gold higher, $2,578 an ounce. We have Brent crude down about 0.6% at $73 a barrel. WTI crude at $70 a barrel. At the open, also want to check in with Alphabet. Their shares little changed right now. That is your Bloomberg opening bell report. Tom and Paul.
Thank you so much, Lisa. Joining us now for a 3-hour conversation, Jason Furman. He's at Harvard University, of course, teaching Act 10. And I can't say enough about your need to follow Professor Furman on Twitter. It is the adult feed out there on economics now, linking in policy and, of course, the uproar of his op-ed supporting Harris, da-da-da-da-da. We're not doing that today. He's got the best annualized inflation metric of, I think it's 21 data points to give you the vector on inflation. We're not doing that today. We're doing this idiocy of this meeting today in our communicative strategy. Jason, you partition monetary policy into 2 tunnels. And tunnel 1, where we're on right now, is completely subjective to rates. And in Twitter, you have this beautifully stated, as only you can do. The policy you get from an inertial style Taylor rule. Discuss that for mere mortals. We're rule-based. We're looking at inertial force to stagger back to once we what knew. Is that basically what we're going to see at 2 o'clock?
Yeah, so great, Tom. You know, there's no award that I prize more than when I get the tweet of the day from you. I get so excited. So, yeah, the way the Fed conducts policy, I call it no reversals. They're very, very, very averse to reversing themselves. They want overwhelming evidence before they start to move. So what does that mean? Let's say the Fed funds rate a year ago should have been 5, and then it should have been 4.75, then it should have been 4.5. They don't move. They wait until it should be something like 4, and then they start to move slowly towards it. That means that if they make a mistake and it turns out, oh no, it doesn't need to be 4, it needs to be 4.5, they can call off the future cuts rather than have to reverse themselves and raise rates. That gives a certain inertial predictability, which is nice, but it also guarantees that they're behind the curve and means that their words just matter a huge amount.
Volcker and Greenspan didn't have this. Paul, I literally remember the joke that if Greenspan, was it peanut butter and jelly or a ham sandwich in his briefcase when he went into the Eccles building on Fed Day. Professor Furman, are all the well-meaning people at the Fed victims of the modern media frenzy, including you pounding them out on Twitter?
Look, I'm not sure. I think this is the paradigm we've been in for at least a decade now. We got into it in an even stronger way because of forward guidance, which when it first was launched during the financial crisis was important. It was all about lowering real interest rates by promising the nominal rate would stay lower for longer. You don't have that consideration when rates are above 0, when you're not in a financial crisis, but it's where we are. It's how the market operates, how the media operates, how the Fed operates. I don't think they can change it this afternoon. But it is worth giving some serious consideration of shifting to an alternative approach where you set rates based on all the information you have, you do your best guess, and that means at the next meeting, you will always be as likely to raise rates as to lower them. So you don't have the cutting cycles, you don't have the increasing cycles, you have something that, and I need to find a better word for this, but statistically is equivalent to a random walk.
Jason, if we had a dissenting vote today, would that be newsworthy to you?
I'd love to see a dissent. There's 12 people voting. They have different views. They don't all think exactly the same thing. It's healthy for people to express those different views. So I will be newsworthy because it's not something that's happened a whole lot under the Jay Powell Fed, but I think it would be welcome.
Once the Fed does begin cutting rates, Jason, is there a preferred path you'd like to see them take, whether it be kind of a measured 25 basis points every period or every meeting, or something maybe a little bit more nuanced?
Right. I mean, I have this like crazy fantasy that they'll cut by 37.5 basis points today. And then we can all call the Fed funds rate 2 without talking about the range or the midpoint of the range anymore. And by the way, it splits the baby between two things. Absent that fantastical outcome, I lean towards 25. I think up until the last few days, that basically is what their forward guidance, such as it is, set the precedent for. But 25 with the expectation that they're continuing to operate at the same pace for the next couple meetings.
I get an A.
But that's not a strong view.
Jason, I get an A in Ec 10 at least for one day because I was saying split the difference as well. I mean, back to Arthur Burns, I actually went back and looked, Jason, not Bowman recently of the dissent, but there have been numerous times where we've done something in between 25 and 50. I agree with you that, splitting it today would be charming. What would be the reaction of the Fed and the reaction of the markets to an in-betweeny 3/8?
I don't know. I don't know if there's computers out there that are programmed to do 25, 50 and they blow up when this happened. I assume that's not the case. I'm not in the plumbing of this stuff, but people are going to be disappointed. People are going to be surprised no matter what they do. At 37.5, you are minimizing the disappointment and surprise. But really, my passion stems from just hating to talk about this range. It just adds extra words every time you talk about the Fed funds rate.
You can come back. Paul, get in here again.
Jason, what's your thoughts of this economy here? Has this Fed waited too long? And because there's a lot of folks that'll point to recent real-time data saying, boy, I think this economy is kind of rolling over a little bit. Are you in that camp?
Look, the economy grew at 3% annual rate in Q2.
Yep.
It looks like it's going to grow at 2.5% to 3% in Q3. Consumer spending is crazy strong. I don't think there's a huge hurry to get to this. I'm glad they're doing it today. It makes sense. If they had known the jobs data, they would have done it in July if that meeting had happened 2 days later. But this, to me, is about the right timing. I think there's still a real asymmetry. Inflation can be very, very costly to squeeze out. The longer you have it, the more costly it gets. And that was the risky side of the mandate as recently as 6 months ago, and they were correct to think that.
Jason, we should stay on this because it's the news of the moment, but I got to go bigger and larger. And you've been writing up a storm about our future policy of these two candidates who seem to be both devoid of policy. Remind our audience coast to coast of the harm of tariffs in America.
Yeah, it's just crazy that we're actually contemplating putting a 20% tariff on every country in the world on every single thing they make. That'll raise prices for American consumers. It'll raise inflation. If the Fed doesn't look through it, it will also result in higher interest rates. It won't reduce our trade deficit at all because a combination of exchange rate changes and or foreign retaliation will happen, which means instead we'll just get less imports and also less exports and all the jobs supported by exports, all with no negotiating theory at all. What are we trying to get from Australia? Are we trying to bring the ballpoint pen industry back to America? It just makes no sense at all.
We'll probably have to export Wolfers in Michigan back to Australia. That's probably what will happen. So, Jason, given the theme on tariffs, let's say the former president wins, and he has to go out and find somebody like you to run economic policy. Now, let's say Glenn Hubbard, I'm just picking a name out of the blue, folks, the wonderful Glenn Hubbard of Columbia is selected by Mr. Trump, President Trump's second term, and he goes in and he has to do this, and Glenn's doing it for love of the nation and all that. Do you have any confidence that right-leaning, conservative, measured economists can convince President Trump of a more measured path?
Look, it would be a wonderful sign if, in the case that Donald Trump gets elected, he picks someone like Glenn Hubbard to advise him. That's not the type of people he's surrounding himself with right now. And, he doesn't need to listen to them, even if he is. His trend over the course of his first term was to listen to more extreme and irresponsible voices over time. And I worry his second term would be an extension of that. But, with him, you never know. So,
hey, Jason, you published in the Wall Street Journal 2 days ago. Yeah. Jason, can you summarize the op-ed piece you put in the Journal, you published in the Journal 2 days ago, putting up the two candidates and maybe what their economic policies look like? Just summarize that for us.
Sure. Look, they're both economics majors, and economists are all pulling their hair out because we're hearing all sorts of things like blocking investment coming into the country from Japan and, price gouging and things like that. But I do think you need to quantify. You can't just do plague on both your houses, and the quantification is quite different. Trump, much, much, much higher tariffs. His tariffs would cover 200 times more of the economy and imports than Harris's would. On the deficit, I add up Trump's proposals at more than $5 trillion. Harris's, in the worst case, $1.5 trillion, but it depends on whether she fills in some details and how she does. And then finally, on the Fed, I have complete faith that Harris would do the same thing that Bush, Clinton, Obama, and other mainstream presidents have done. Donald Trump is a real tail risk to the Fed in terms of how he handles them.
Jason Furman, thank you so much for joining us today at Harvard University, teaching Ec 10 after ManQ and others. Jason Furman, of course, on this Fed Day as well. Quickly to our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa, thousands of people were injured and at least 12 were killed when their pagers exploded in Lebanon. Hundreds of the pagers were carried by Hezbollah. Secretary Antony Blinken today spoke on the issue in Cairo.
The United States did not know about, nor was it involved in these incidents, and we're still gathering the information and gathering the facts.
Hezbollah vows to retaliate. Donald Trump is promising to bring back the state and local tax deduction, or SALT, that he limited to $10,000 when he was president. He made the pledge on Truth Social ahead of a rally today in suburban New York on Long Island. Last night, Trump held a town hall in Flint, Michigan.
We have to take back our country. We have to win. We're going to win, and we're going to make America great again. That's all there is to it. Very simple. Right?
Vice President Kamala Harris is proposing a cap of her own on the cost of child care. She says no working family should pay more than 7% of their income on raising a child. She made the comment at an event with the National Association of Black Journalists, where she also talked about the attempt on Donald Trump's life.
I checked on him to see if he was okay. Yeah. And I told him what I have said publicly. There's no place for political violence in our country.
Today, Harris plans to speak at a Congressional Hispanic Caucus conference. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
I was going to say subscribe to YouTube. Lisa, can you see me saying, hey, everybody, Bloomberg Surveillance, subscribe to TikTok?
No, definitely not. Definitely not.
I can't go there.
You just did.
It was a test.
I liked it.
Are you on TikTok, Michael Barr?
You know what? I am not on TikTok. I am only because I am an old geezer.
The kids hide it from me because they know I get upset. You know.
Yeah.
They just I don't know.
I actually have a phone still that has a rotary dial.
Really?
I really do. I keep it around.
It works. Very cool.
I just.
Yeah, that's okay.
It's a collector's piece.
Red and green on the screen. A big churn to 2 p.m. this afternoon. The Fed decides 1:30 p.m. We're out on YouTube and across radio nationwide. This is I'll get it out. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks mixed over uncertainty of how aggressive the Fed will be with interest rate cuts. We'll find out 2 p.m. Wall Street time. Our coverage begins at 1:30. Now, the S&P 500 is little change, and this is after briefly crossing its all-time high earlier this week. It's up about 2 points. The Dow down about 0.1%, 56 point. The NASDAQ up 0.1% or 18 points. We have the 2-year yield at 3.63%. That's up 2 basis points. The yield on the 10-year 3.68%, and that's up 3 basis points. To currencies, the dollar weaker, Japanese yen stronger, euro, British pound stronger. We have Bitcoin down about 1% at around 59,000. Stocks on the move. Nippon Steel, it's up about 2% in Japan, the company being allowed to refile its plan to buy U.S. Steel. Now we have U.S. Steel up about 1.5%. And Intuitive Machines up 51%. The company said it landed a contract from NASA. And finally, with so much talk about AI, Black Eyed Peas frontman will.i.am, well, he's launched an AI-powered interactive set of radio stations. It's called Radio FYI. Now, he tells Bloomberg it let listeners stay in tune with their community and also get a more personalized experience. That is a Bloomberg Business Flash.
We're not?
Tom and Paul.
We're not a personalized experience?
Exactly.
Are you kidding me? Jay, good morning. Nice comments out on live chat. We're having a personalized experience right now with Jay.
Yep.
Because we're very AI. The guy from KPMG was talking about AI. I'm like, you got to be kidding me.
Exactly. Well, that's what, you look at the surveys. That's all these CEOs want to talk about. They mention it all in their conference calls, whether they're in the pet food business or the tech business, it's AI.
If I order food from the grocery store online direct, they deliver it to my door, can AI help me get apples that aren't rotten? That's, like basic stuff.
Gotta go to the store.
We're exhausted. I'm going to be here till the Fed meeting today. Paul's with Alex Steele darken the door.
Sure.
And there's lots going on, folks. Thank you so much for your attendance. Our goal is to get our audience to 1/3 as large is Balance of Power. That's the strategic goal here. Joining us now from Balance of Power, Kaylee Lines. This is our election view. Surveillance election 2024. And again, I tried to go for vote early, vote often, but that got vetoed. Ms. Lyons joins us today from Washington. Kaylee, let me ask you a question. Asked David Gura. He said Arizona. Which state are you most focused on?
I think it has to be Pennsylvania, Tom, because there is no path to victory really for either candidate, at least no easy path if they don't win Pennsylvania in the 19 electoral college votes that come along with it. And this, of course, is a state that had a very close margin in 2020 between Joe Biden and Donald Trump. It could have that again, even though Kamala Harris is polling better than Biden was in that state and some of the other swing states. She does have a wider map. Some of those Sunbelt states, including Arizona and Georgia, North Carolina, may be in play, but Pennsylvania is still going to be a key area of focus.
So let's split it as they do in Pennsylvania. Don't give me an answer like Altoona. That's not going to get it done. Which is more important to Katie Lines? Eastern Pennsylvania, Philadelphia, or Pittsburgh, Pennsylvania after they signed Sidney Crosby to a final 2-year contract? Which matters more?
Well, Pittsburgh maybe more so for the steel workers and the union vote that is present there, Tom. And you've certainly seen that on display with the appeal to unions that the Harris-Walz campaign has tried to make it, the Trump-Vance campaign the same. And, of course, the U.S. Steel deal, which now is going to have a delay in the decision from the administration as to whether or not Nippon Steel can actually purchase it. But that is a play toward American workers and union. As much as they say it's about national security, it's also about the labor force behind that. So that's going to be something to watch. And also energy policy. Obviously, Donald Trump is hitting Kamala Harris aggressively on the issue of fracking, what she said in 2019 about being in favor of a fracking ban, which she now says she doesn't support, but he is not going to let that go easily. He says that she can't win Pennsylvania because of that issue.
Kaylee, do we expect Vice President Harris to engage more with the press? That's been a key criticism from the Republican side that, you know, is she scared of sitting down with the press, doing a town hall, any of those types of things? What have we heard from the campaign?
I don't know that it's necessarily scared Paul, more so that she just hasn't, frankly, had to do it that much because she's been able to capture a lot of the free media attention as it is in her very short campaign thus far. She did do her longest sit-down interview we've really seen her do with the National Association of Black Journalists in Philadelphia yesterday, where she had to field a number of questions, including around issues of race and identity, but also some policy. And she put forward new policy ideas that are not new to this administration. The idea of, for example, capping child care costs at 7% of income for working families, but she hasn't gotten more specific with that policy necessarily. We don't exactly know how that would work, what families it ultimately would apply to, but of course it's all part of her pitch toward the middle class, which she says is a very different pitch than the one Donald Trump is making as he focuses tax cuts more so for the wealthy and large corporations. And now apparently, guys, and this is important to our audience in New York and New Jersey, he wants the salt cap deduction not to be capped anymore, even though it was him that put the cap into place in the first place in 2017.
We bring in right now our surveillance salt cap correspondent here with Kayleigh Lines, John Tucker.
I'm not going to name any
think?
names, Kayleigh, but I know one guy in New Jersey who pays like $14,000 a year in property taxes. You know what he gets for that? Nothing. Absolutely nothing, Kayleigh.
Thank you, John Tucker, for that. Our surveillance salt tax
completely unbiased.
Here. But Kayleigh, that goes to, and I would bring in the former president as well, but I think he's on a path. Kayleigh Lines, could you suggest that Vice President Harris will move to the middle in the coming weeks?
We've already seen her try to do some of that moderating of her policies, including on the issue of fracking, which I mentioned, healthcare issues as well, even when it comes to the border, talking about a prosecutor who will strictly enforce the laws that prevent illegal migration. But so, yes, there has been a pull to the middle. I would say Donald Trump is trying to do that as well. He's trying to moderate himself on the issue of abortion, for example, talking about how he would be great for reproductive rights. He wants IVF, which is a contentious issue in some Republican circles, to be paid for entirely by the government or by insurers. So we are seeing kind of the pull to the middle at both ends. And we're actually seeing some overlap between these candidates in terms of the kinds of policies they would like to pursue. We obviously talked about SALT, but another tax policy like not taxing tipped income, for example, or increasing the child tax credit, it actually seems to be an area of bipartisan agreement by both of these tickets. And of course, that means that either way, we might end up with a higher deficit with either of these two in office than we would otherwise.
Kayleigh, thank you so much. Kayleigh Lines, of course, Balance of Power. Look for that noonish with Joe Matthew as well. Yep. Cranes is out with the report, Paul. You love this. You see it every year. Jack Grieve has the report. The lowest rated airport, once again in America, thank you, J.D. Power, EWR.
Yeah, there we go.
Terminal A didn't move the meter. Paul, why is Newark the worst airport in America?
Many reasons. The one that is most annoying, I think, to most people is what you do at Terminal C, which for decades has been the main United terminal. With the advent of Uber and all those kinds of things, it is a land warfare to go out there and get your car. And you have to literally stand in the middle of the street and cars are coming by. Yeah. Now with Terminal A, it's just like the other nice airports around the world. They go to a separate place. They're standing there waiting for you. It's very civilized. So, but they're getting there.
Lisa will feature this tomorrow in the newspapers. Got to do it. JFK moves from number 11 to number 4.
Oh, nice.
In the latest
I take
rankings.
issue with all of this. Having recently been at the International Arrivals Terminal, it's just like I was embarrassed.
Yeah.
Absolutely embarrassed for the city and the Port Authority.
And I can't read it all. Lisa will take care of this. We'll do it tomorrow. We're going to have a full report on airports nationwide, and particularly from Washington to New York to Boston as well. Major shout out and thank you for everybody on this day. I thought, Paul, we had some really balanced conversation.
Yep, absolutely. Smart folks.
We try not to do the media frenzy over this. And whether it was Professor Furman or people in equities, Alicia Levine.
Alicia, boy, excellent. And Gina Martin Adams, and then we. So there's a lot to look forward to here. And again, you'll be full coverage today, Tom.
Team coverage.
1:30 p.m.
Yeah, I'm not going to go around the room and say, "What do you think?" Because I'm deaf in the parlor game, and I decided like Thursday, I'm not telling anyone what I think they should do because who cares what another voice says? But we will go to surveillance congestion correspondent John Tucker on the outro.
Haven't you heard enough already this morning? No, there's
the traffic is so
Third
bad.
Avenue has just been an awful
it's
lately.
Done. They ruined Third Avenue. We got to go. They're not going to be dancing in the streets on Third Avenue. No question about that. Thanks to our team for great conversation. We'll do it again tomorrow.
Sure.
Man, I'm just tired and bored with myself. Hey there, baby. I could use just a little help. You can't start a fire. You can't start a fire without a spark. This gun's for hire. Even if we're just dancing in the dark.